That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheat.
I'm not fucking leaving.
Sell it all today.
Look at his face. It's beautiful.
Welcome to the fucking show.
All right. Happy Wednesday, everybody. We're here with Mr. Patel. It is Wednesday, March 25th, 2026. Appreciate everybody being here. Mr. Patel, how are you doing? How are you handling things? Oil's up. The market is down, but Chris Patel is always here to tell us what is up.
Why is your camera so grainy?
Is it?
It seems grainy. I don't know.
What about that?
There you go. Better. Much better.
It was the wrong face cam setting. That's my fault. Thank you for speaking up.
Got it. Everything's good, man. We're just impossible challenge. Don't mention VG the whole episode. Okay, we won't. Yeah, the market's been taking a nosedive, primarily because of just the situation in Iran right now. I think the amount of uncertainty around long-term oil prices are driving inflation fears, and inflation fears come in. People say multiples might end up compressing, and then that's kind of bleeding over into things. And then simultaneously, we're dealing with the SaaS apocalypse. Like even IGV was down again today, which is kind of crazy to see. These companies that are still generating significant amounts of cash flow, they're still doing fine, but the narrative has basically crept into like everyone's brain and saying SaaS is dead, and they're willing to give huge discounts on some of the biggest SaaS companies in the planet. So, I personally think some of them have gotten oversold, and they're actually worth looking at right now. And starting positions in. And then there's also some private equity companies with software exposure that's more selective, that I think is also a good opportunity as well. So I think right now the market's there's just so much fear in it that I think we're actually getting some good opportunities now.
Fear or uncertainty or both?
Around what? Like
uncertainty about what's going to happen with oil prices, uncertainty with respect to what's going to happen with then inflation, interest rates, then kind of following from that? Or do you think it's strictly just fear?
It's a combination, like it's just the market has so many like negative things going for it right now. Not the market. Let me rephrase. Not the market. The sectors that we traditionally look at, because, just retail is very heavy in tech. So a lot of times, and we're retail investors, so last thing anyone really comes out and does is like, let's talk about Coca-Cola. Like go look on YouTube and find out how many like YouTube retail content creators are talking about Coca-Cola or Pepsi or any of those like smaller names. Well, me and you actually do talk about things outside of tech, which in my opinion actually differentiates us a little bit. We talk about consumer packaged goods companies. We talk about coffee, like Dutch Bros. We talk about, Sprouts Farmers Market. Like, who else is talking about stuff like that? So.
I mean, speaking of, Celsius has taken a massive dive, and I know it's something that you had probably 2-3 years ago. I forget what year it was. It might have been 2023. We've been talking at this point. Me, you, Tev. Like, I got a 30-month renewal for my milestone membership payment for Tevis's channel. Like, I didn't even know that I've known Tevis for 30 months, but here I am, a 30-month member to his channel. But anyway, it's just surprising at this point. I don't know what year some of these trades were kind of made in, but Celsius, man, below $40, and it's pretty interesting because granted, there has been a lot of dilution because of what's going on with the mergers and Rockstar and everything like that. And so it's interesting, but it's below a $10 billion market cap. And I'm kind of curious to look at it again, but I just think that the competition is getting pretty fierce over there. But I'm just surprised. You're talking about consumer processed goods. That was an interesting play that you were able to kind of truffle pig out, and it panned out well for everybody when the broader market kind of found out about it. And LNG prices and us kind of hanging in the wind associated with that. It's been an interesting ride for the past several years. But I'm curious. I mean, are you like Steve? Are you looking at any of these SaaS names to add here? Or are you kind of staying away until maybe they either catch a bottom or they just don't interest you right now?
No, I've already started to deploy some capital, not a lot. My the first one that I started deploying in was Adobe, only because Adobe's gotten so oversold that like it's like a value play at this point. And just the sheer number of share buybacks that they can do over the next few years makes it worth looking at, right? So if you look at Adobe, bring up Probably.ai or XYZ, and we can take a look together. So Adobe's definitely taken a big hit over the last few months. And the thing is, their business does not look like it's actually slowing down to the degree that people are thinking that it's going to cause massive levels of disruption. On the other hand, they do have a significant increase in cash flows. And because of those cash flows, they can kind of support massive amounts of share buyback. So if you're a value investor, you kind of want to see this trajectory where you do have a company still growing at a brisk pace that you're getting at a significant discount. And, this has happened to Adobe quite a few times. So I think Adobe is slowly transitioning into more of a hybrid model with regards to capturing value from AI, in which case, if you're willing to kind of gamble a little bit on the idea that Adobe, will successfully transition like they did between selling products to selling, SaaS, which is, software as a service, then they'll be able to kind of negotiate their way out of this current situation and get back to growth mode again. And as of right now, because of those share buybacks, you're getting this giant EPS boost. So over the next year, I'm going to be closely monitoring this to see, has there been any major declines in revenue, right? Because if you don't see that major decline in revenue, that means that the thesis that a lot of the market has right now, which is SaaS is dead, is completely wrong. And the market gets things wrong like this quite a few times. I mean, you look at Meta at one point. Remember in 22, everyone's like, oh, social media is dead. No one's going to use it. And it's okay, here we go. Here we are. And then came along, oh, search is dead for Google. And Google was trading at a very low multiple. And now all of a sudden Google's like back up there again. So I think Adobe has an opportunity to get back to its greatness, but it's not going to be a linear V-shaped recovery, in my opinion. Not yet, anyway. Not until this AI is not disrupting the narrative starts to kind of like come down. And if we do see like that narrative play out and we start to see like Adobe's growth slowing down past, let's say, like 8%, that to me is pretty much confirms that Adobe is getting disrupted, in which case, it's probably a good idea to take some money off the table. But until then, I don't mind putting some chips on the table and saying, let's let the dice roll.
Yeah, Adobe's been a very interesting one to me. I mean, yes, I understand with what's going on with like Nano Banana and all those Nano Banana, whatever the hell it's called, and all these AI toolkits that have been able to come out that might impact, say, Photoshoppers and things like that. I mean, to me, like you stated very eloquently, the revenue has yet to be impacted. And in fact, it's gone up still rather substantially. So I'm very curious. I think, like you stated, there's more upside here than there is downside. And so I'm very curious to see where it jumps to in the next 12 months.
Yeah, I mean, one of the reasons why it recently got sold off is primarily because they, had a change in CEO. The CEO said that he was transitioning out and he would, eventually they would get someone. So I think there's a little bit of uncertainty on that as well. Whenever you have these leadership changes, especially in companies that have had a dedicated leader for 18 years, it's kind of hard to fathom anyone else being at the head of it. I mean, it's the same challenge that you run into with companies like Apple. Just the rumors of Tim Cook leaving made Apple go down, because he's been that steady Eddie that just keeps the market, going for Apple and doing really well. So then, like I said, it's just when you have when you have someone who's been with the company for so long, and especially at these most senior leadership role, and they're transitioning away, people can't help but believe that the next person that's coming online, you don't know if they're going to be able to rise up to the challenge that the guy before has been proven to be, right? So it's one of those things. I did not forecast that they were going to have a leadership transition, even though that should have sort of been something on my brain, because the guy has been there with the company for almost like 30, 40 years, and he's been the CEO for 18 of those years. I mean, at some point, the guy's like, hey, bro, I'm done. And what's funny is he's not leaving the CEO position. He's just transitioning to being the chairman of the board, which is a lot less being on earnings calls, a lot less dealing with day-to-day operations. And it's more just, hey, I'm here to kind of work on helping you guys maintain your current standing, you know?
Yeah, it's interesting. When the company split the chairman and CEO role, the company does operate in a very different way, because at the end of the day, I think a lot of people will kind of look to the CEO to be the leader of everything, and to an extent they are, but the chairman is kind of really the one that pulls the strings behind the scenes. And so I've seen that with a lot of different companies that I've kind of monitored over the past few years, where they do have a split chairman and CEO role. And some, the chairman kind of just gives the reins to the CEO, but sometimes the chairman and CEO role gets split for a reason. So
yeah. So, the market's doing what it's doing. I think we're getting some deals right now that if we have like a long enough time horizon, you should theoretically do well on. Like, look at Microsoft. Microsoft's another one that's taking a bit of a beating right now. But whenever you see companies like Microsoft starting to hit their 200-day, it's like, what's going on here?
Whoops.
Yeah, the fundamentals on Microsoft are pretty good. So there's definitely a disconnect on sentiment. So if you can fix sentiment, things will bounce back. And Microsoft has kind of been, it's like one of those proven companies that they're not going anywhere. And at some point, you're going to have support levels come in and people are just going to start buying this thing up. Like, I don't see Microsoft getting disrupted. If anything, it probably lends to their future growth because of just how much AI is running on Azure and all the hyperscaler clouds,
Yeah, Microsoft's an interesting one. I've honestly thought about putting it's 370. Jesus Christ. I mean, I've thought honestly about putting a decent chunk of change into it, just because 370 is pretty insane. Well, I guess that's the last few months, but what is it down today? I mean, it had to be down. Yeah, it's down
0.9.
Yeah, I mean, interesting, very interesting.
Yeah, and the thing is,
5% in the last week, 8% in the last month, 23% in the last 3 months. Very interesting.
Yeah, I mean, we could take a look at, just break down their financials and just understand, just from a business value standpoint, what we're getting ourselves into with something like Microsoft. So,
what do you want to look at?
Yeah, just put in let me share my screen real quick. Sorry, I'm just used to using this more.
You're good. No, if you can talk to it, whatever's better to talk to for you.
Yeah. So the first thing is, just if you look at Microsoft's like growth trajectory, they're still going to be growing at a nice solid 15% year over year growth rate, which is always good to see. Like, whenever you see a growth slowdown like this, you could see multiple compression, but this is good, right? So in the future, you've got growth, and a lot of it is going to be led by Azure, right? The one thing that that a lot of people may or may not know is that if you look at their EBITDA is growing alongside it. So, if you just look at it from like a margin perspective, typically what happens is, let's say you're doing a lot more CapEx, right? You would typically see margins get hit because eventually things have to kind of come in. And so if you look at their margins, net profit margins and EBITDA margins, there it is. Total revenue out the way. they've actually been expanding. So their EBITDA margin is almost 60% now, and their net profit margin, this is after CapEx, is about 39%. So if the CapEx was really, really impacting them, like to the degree that some people are thinking, then you would see this net profit margin go in the other direction, right? So net profit margin is actually up. They've got plenty of cash on the balance sheet. They've got almost what, like 80 billion, something like that. Like, yeah, they've got almost $89 billion in cash and cash equivalents right now. So they're not in a position where they're going to be hurting their share buyback rates, because their cash from operations is growing. And yes, while their CapEx is actually, they've got it for higher levels of CapEx, and you can see that CapEx starting to kind of come in. And just get rid of all this other stuff and just unify this. You can see they still generate almost 160 billion in cash from operations. 83 of that went towards CapEx. Now this CapEx number is going to be growing, but so is their cash from operations. And then on top of it, if you think about it from a share issuance standpoint, let me just put up net issuance, and then also the common share dividend right here. You can shout them out while I get all this loaded.
Yeah, Rusty, you're the man. Thank you. Sorry, I was also pulling up our year-to-date performance and annual performance. And Chris, we got to talk about that because we're doing some shit. Sorry, continue. Okay. Rusty, you're the man. Thank you so much for being a loyal watcher, and appreciate you chiming into the chat all the time.
Okay, so net issuance. Okay, so you can see here, long-term debt, they've been paying it down, right? They've got plenty of cash flow to finance the current CapEx cycle and also maintain their dividend, which is about 25 billion right now. And then they also have another 20 billion in share repurchases, and then 83 in CapEx. So it's one of those things that, and especially if you add on the balance sheet, like let me just put on the cash right here. Facebook, Meta, they're running into the challenge that their CapEx is eating into their ability to buy back shares. With Microsoft, that's not necessarily the case. Let me just double check one thing, just make sure share-based compensation. And their
share-based going down a little bit, but
yeah, but look at their share-based compensation. So a lot of times what happens is the share-based compensation, all it does is really offset dilution from common share issuances, right? But you can see common share issuance is about 20 billion and share compensation about 12 billion. So there's still about $8 billion worth of share buybacks that are actually value accretive to shareholders. I think that we're likely to see share buybacks kind of accelerate a little bit going forward, maybe to like the 30 billions, because they have in the past, whenever they have been like oversold, you have seen that they've expanded their share buyback capacity. So in like 2022, they bought back 30 billion in shares, right? So now they're doing 20. So it's very likely, because they have this massive cash position, to take advantage of their really strong balance sheet to buy back shares at a pretty attractive price. So if you just look at this from like a future, on a forward basis, on a forward enterprise value, their enterprise value right now is, sorry, I got to hide all this stuff.
Well, Chris is getting that. Mr. Amit Kukreja, thank you so much for joining as a member and being in the chat and gracing us with your presence. Much appreciated. For anybody that has yet to, it's surprising. While Chris is bringing that up, if you haven't subscribed yet to Basis Points, the next hottest, if not already the hottest financial podcast out there, I'll find you and I'll probably poke you in the eye. You want your eye to look like this? It's what's going to happen. So don't, if you want to look like that, just don't follow. But if you do, what you want to keep your eyesight, then well, I'll put it in the chat.
Yeah. So if you just look at this, it's trading at even a lower forward EV to EBITDA with the same growth rate that it was in 2022. Actually, 2022, the growth rate had slowed down. This time, growth rate hasn't slowed down, and the value is still going in the other direction. So if we just look at, let me just bring up layer on EPS. So if you see here, and actually better ones to show this. And let's do this on a 12-month trailing basis. So you can see that usually what happens is if your growth rate starts slowing down, people usually compress the margins and basically the stock tends to go down, right? So your forward EV to EBITDA starts to go in the other direction. So right here, your EPS growth went from 25% in March 24. It went down here. And so you saw the stock kind of follow along. But one of the biggest differences is that their earnings are actually going in the right direction, but their multiple is going in the wrong direction. And this is typically good because that means that fundamentally the earnings picture in this company is getting stronger while the multiple is going down. So you're actually getting really good, like a good discount on this thing. So you can see here, usually when there's an upswing in EPS growth, stocks tend to upswing as well, longer term. And then usually when you start to kind of moderate that, you start to flatline. And when you start declining your EPS growth, you start to go in the other direction. So you have this, and then you have a couple of major catalysts for Microsoft coming up too, which is like the OpenAI IPO. I'm sure that we'll get a better idea of what the value of Microsoft position is going to be in OpenAI. And just from the amount of people using all these AI software tools and enterprise tools, you're kind of seeing that the IPO market for these for these AI companies is going to be very, very healthy. So, yeah.
I want you to kind of explain your thesis here on something. So this was a really good post earlier today by Amit Kugreja. And he basically said, would you rather buy Microsoft here at $370? I still can't believe I'm saying that number. Down 21% year to date, 2.7 trillion market cap. Can't believe I'm saying that. 22x forward PE, or an Nvidia at 179, down 5% year to date, 4.3 trillion market cap, 21 times X forward PE. You said Microsoft. Now, this is actually way closer than I thought it was going to be. I know there's a lot of Nvidia lovers on X, so I was very surprised that it was actually 45.55. Why would you, as somebody, because I value your opinion, I agree with you honestly. I don't hate Nvidia, but for some reason I've just never been able to get myself to buy it. Why am I agreeing with you on Microsoft here? I don't understand why I am, but I feel like I am.
So the key difference between Microsoft and Nvidia is that Microsoft, like I said, it's growing at a 15% growth rate year over year. They've got all sorts of moats around their business, right? So it's a nice, steady Eddie grower. Nvidia, on the other hand, has this giant parabolic move up, but then there's going to be a giant parabolic move going the other direction in terms of growth. So what tends to happen is you tend to get this giant upward move, and then at the pinnacle, at the top of the peak, you're going to see multiples starting to compress on it. Why? It's not because of it's Nvidia's fault. It's not like they're not selling great products. The challenge is it's really, really hard to go from spending 200 billion to now 500 billion to now $1 trillion. You know what I mean? Like, you literally have to get $1 trillion worth of demand out there for like 2028 in order to kind of support that growth. So what I see happening with Nvidia is that we're going to see Nvidia inflecting about 70% growth rate right now, and next year, according to projections, it's probably going to be 40, right? And that's on a base that's gigantic. You're talking about almost $500 billion. What do you think the growth rate is going to be after that? You think you're going to get another 50% growth? Like 50% growth on 500 is an additional $250 billion of additional spend just to get 50% growth. And then the year after that, you would need like another 400 billion to get that same level of growth, because you're just working with larger and larger and larger numbers, right? So at some point you get this re-rating where people are going to say, wait a second, Nvidia is not growing at 70%, it's growing at 40. And then they look on a forward basis next year, and what do they see? They see the growth rate slowing down to 20%. And so me and you, we both know the market is forward looking. The market is not backward looking, the market is forward looking. So if you're telling me that you're willing to pay for a traditionally a cyclical business that much, then you got some, you got some risk on you. The other problem that you run into with Nvidia also is that it's not enough that the law of large numbers is going to come after them, but you're starting to see some of the biggest customers that Nvidia has starting to lose access to the capital markets. Oracle, which has been a prolific buyer of AI hardware, they're getting in the position where no one even wants to buy their debt. They're having to buy credit default swaps to sell their debt. And their cash flows, unlike the hyperscalers, which can still maintain the current CapEx cycle, Oracle doesn't have the cash flow to maintain the CapEx like spend indefinitely. So that's a major player that's going out the door. Then you've got Microsoft, Amazon, and Google. While their CapEx numbers are still strong right now, they're also committing to spending on their own hardware. Like Google is not saying we're just going to go crazy with Nvidia and pay an Nvidia 80% margin on every single thing that we buy. They're saying, no, we're going to do our own TPUs. Same thing with Amazon. Amazon's doing their own thing with their Trainium chips. Microsoft is trying to do their own stuff. And then Meta is doing Maya chips. And then you also have AMD on the wings. So this whole notion that Nvidia can stay the daddy forever, I think the market is sort of waking up to that idea that yes, Nvidia is definitely the lead right now, but just like OpenAI was the leader 6 months ago, and Anthropic came along and started to whittle away at them, Nvidia is going to have the same competitive pressures on them going forward. So you've got two major problems for Nvidia in the future, which is number one, competitive pressures from your biggest clients, and then also you've got compression from just the sheer amount of growth that you have had in the past, which means that future growth is going to be challenged because you're literally working from really, really high numbers. So when you think about it that way versus which is Microsoft is like 15% year over year, nice steady growth like that. So the market tends to give those companies higher multiples because you have basically a much more predictable business model than you do with like Nvidia, which is a lot more cyclical. Now, is Nvidia doing things to work its way out of that cyclicality? Absolutely. That's why they're taking equity investments in all of these AI companies. But that's not a cash flow scenario. You're not going to get cash flow from them on your balance sheet. Yes, their growth is going to show up on your earnings because you'll be able to say, look, we bought Anthropic at 8 billion, now it's worth 100. That means that the 8 billion that we spend is now all of a sudden 10x more. Yeah, you could say that. So they've invested a lot of their money in like CoreWeave and all these other things, so that appreciation should show up, but it's not nearly as predictable as something is like cash flows, like dedicated cash flows that you know are going to be coming in for the end of time. I mean, at least for Microsoft, I don't see Microsoft slowing down at all. So, yeah.
Do you believe this massive growth? I mean, just comparing Microsoft and Nvidia here on the share here. I mean, we're talking about Microsoft going from about $17 EPS to like 21 over the next 2 years, and then $8.29 approximately for this year, and for Nvidia to over close to $15. I mean, it's almost doubling in 2 years' time. Do you think that Nvidia, while everyone's predicting this continued growth, do you think that there could be some sort of recession where, I'm not saying that all CapEx is going to stop on a dime, you're going to have negative, year-over-year growth in the next few years or anything like that. But do you see a point where, let's say, the Microsofts, the Googles of the world kind of choke back on the growth aspect? And so that obviously would have that long-term impact on will you actually start to see doubling of EPS? Maybe you see it for 28, but going into 29, is there some sort of recession that happens in 27, 28, 29 that would then put an impact on some of these numbers? A key example is Amazon. Everybody was going gangbusters in 2021, early 22 about invest. And then you saw capital expenditure drop like a rock from Amazon, and they went into kind of efficiency mode to say, okay, yeah, this is great. We're making a lot of money, but we need to actually start making some good margins on this. So this is when they started to get into the margins of like over 10%, and everyone was, and including myself, was starting to get extremely happy as shareholders. Do you think that we'll go through a cycle like that currently people don't foresee? And it's been something I've been talking about for quite some time, but like the longer this goes on, the more capital and the more return on capital I see from a lot of these investments. It's harder for me to envision when that slowdown is actually going to occur. But do you think that because of this uncertainty of people being fearful about companies taking on debt and what kind of we saw even before the war, prior to the war that's been ongoing, Microsoft dropping from over $500 a share to $371 today. Do you think that that is eventually going to get people to fall in line about pulling back a little bit, focus a little bit more on the dividends, focus a little bit more on the buybacks, like you were stating?
So let me nuance something really quick before I answer that. The reason, remember the question was, is Microsoft or Nvidia, which one is going to do better? And I said Microsoft. That doesn't mean Nvidia is not going to do well also. So I hope people in the chat and everywhere realize this is not me shitting on Nvidia. I think sometimes people get this notion that just because you think something else might be a better return potential over the next couple of years means that you think the other one is shit and it's going to go down.
Chris is bearish Nvidia. It's going to zero.
Like, yeah, that's dumb. I have Nvidia. I have a ton of Nvidia. But once again, my prediction for Nvidia is that we're more likely to see Nvidia growing at about 15 to 20% per year, whereas Microsoft could probably do 30% a year because it's just going back to a much higher mean reversion, right? So I think right now, Microsoft would be a better option to put some money into than Nvidia would. That's not to say that Nvidia is not going to do well over the next couple of years either. Now, there are a couple of risks, and we have to discuss the risks. No matter how much demand is out there for AI, and I know that everyone likes to there's just so much demand that we cannot keep up. Well, yeah, because you're giving away so much of the fucking thing for free. Okay? There's a reason why people are using AI like crazy, because majority of the AI that you're using right now, it's all subsidized. No, the $20 that you pay to Claude or $200 a month, it's not even scratching what it's actually costing Claude, what it's costing OpenAI. You ask people like, okay, OpenAI, how much money are they actually making off of your queries and searches and your stuff? And they'll tell you right now, we're losing billions. We'll be losing billions of dollars per month. At some point, people are going to have to flip, right? Now, at least with Anthropic, their focus has been a lot more on the enterprise. So their profitability is probably, sorry, let me just mute this. Their profitability is probably more likely to happen sooner rather than something like OpenAI, which OpenAI, like Sam Altman has said it completely, come out and say, we are not projected to make any money, net profit, until 2031. Okay. They are spending hundreds of billions of dollars and they're not expecting to make any money until 2031. Like, just think about that for 2 seconds. At some point, people are going to pull the plug. Hell, OpenAI is pulling their own plugs now. What did they do yesterday? They stopped Sora. They stopped spending money on Sora. Why? Because people were generating stupid cat videos that weren't monetizing at all. And what does it mean for Sam Altman to spend $500 so someone generates a 20-second clip about something stupid? You know, was it nice to get people hooked on AI, get them addicted? Yeah, every drug dealer, they lose money initially. Like if you're a drug dealer, the first time you set up shop, you're literally going to lose money. Anthropic is losing money. because
just
it's
kidding.
just a drug game.
kidding.
It's the drug game, right? But the thing is, once you get people addicted, then it's like, okay, now I can, monetize the shit out of this. Like, can you imagine yourself living without Claude?
Knowing what I know now, it's even like I try to think about ways at work that I can utilize it, even though like we're only a co-pilot organization. I'm like, I'm putting this. I was like, you don't have to approve of this, but I'm just going to do this in Gemini.
Yeah, I have Gemini. I have my
uh-huh.
work. We have training for Gemini right now. Like we're a Google shop. We're using Gemini, right? It just says like, hey, listen, come get the training for this, that. So I think AI is going to be just like the internet is, where it's going to be heavily commoditized, but it's also going to be very profitable because it's going to be like a utility. Every person, I imagine in the future, every single person on the planet will have some level of subscription to an AI product, whether that be through their phone, because, like let's say you're on Apple and you're utilizing that and all the other stuff, or you're using it for work, in which case you're paying for an enterprise license, right? Or it's going to be something along the lines of, like a service that basically that you have to watch an ad to use.
Yes. I think it's going to be more the latter. I think that's either going to be a freemium version where you have to watch an ad, or your results could be tampered by ads. And I think Gary Vee said this a long time ago. He was saying that like voice is actually going to be the next like frontier. And I don't think he's 100% wrong. I think he might have just misstated it. Like I think he was thinking about it from like using Google Home or like an Alexa, for example, being like what you use to kind of order things, and then they can like trickle in things. So if you say, oh, we need to buy cookies, it'll be like automatically to slip in Oreos because Mondelez is paying Alexa to kind of advertise for that. So if you're being super generic, it's going to, and same thing with jeans. It's like, well, you're going to say jeans. Is this going to slip in Levi's? Like you need to buy Levi's because you're not being specific about the type of jean. I think it's going to be something that actually ends up being, it's whether or not you have the free version where your like advertisements and results can be kind of touched and doctored in a good way. That I think can be part of the free part. But if you don't want anything, kind of like YouTube Premium, like then you pay.
I was about to say that. I was about to say that's the exact one that I was gonna reference. Like YouTube Premium is perfect because it's one of those things that you don't realize how much time you spend on watching ads until you have YouTube Premium. And then it's like that with the LLMs too. Like the minute you start hitting these data caps, it's like, oh, I don't want to upgrade to the higher tier, but I also kind of need to get my work done. So let me get that higher tier and stuff like that. Yeah. Like you,
no,
right?
you even hit it true on the head, like right on the head of there as well. Like, even with Gemini, I'll hit limits, and Grok, I'll hit limits, and it'll be like either wait a little bit, we're getting a lot of, or it's like, or get the next level up, which is like another $20 a month or something like that. It's just like, well, depending on how much you need it, a prime example as well is like I was talking to Tevis because he uses Claude Code for his website that he's working on, and he's like, generally speaking, if I'm just vibe coding, not really being serious about it, I'm kind of just like doing other stuff with YouTube or whatever. He's like, I'll generally get to like 3 hours and 30 minutes, and it'll say you have to pause because it does a rolling 4-hour reset for Claude Code. And so it's like, it's generally pretty good because then it forces me to go get like a cup of coffee or get lunch or, something like that. But it's like, what if you're not vibe coding, right? Like what if you're in the trenches trying to get something done and you need it done? To me, I'm not going to fucking wait over $20 a month. I'll just pay the $20 a month.
Right. Exactly.
And same thing with Amazon. Like I used to have Amazon Prime, and last year they introduced Amazon Prime with ads. And every time an ad comes on, I'm just like, God effing damn it. Why am I still doing this to myself?
Dude, I was so pissed off the other day. I was watching Dune 2 on HBO Max, and I have HBO
hold on,
Max.
so there, do they have Dune original on HBO?
Like which one? Like they've had multiple movies of Dune. Like the recent one with Timothée Chalamet.
Yeah, because I haven't seen it. I haven't seen Dune
Oh, yeah.
1 or 2 or
Yeah, they have both. They have Dune 1 and 2 on,
maybe I'll do
on
that, watch
HBO
that.
Max.
I've heard that from fucking phenomenal movies. Sorry, go ahead. I
They're
interrupted.
really good. They're really good, dude. They're really good. So, yeah, I just.
But
I
you were
just
watching
think,
Dune 2 and an ad came up, or what were
Yeah,
sorry, I interrupted you.
HBO. Yeah, HBO Max came up with an ad. I was like, I didn't even know I had an ad. I was in the ad tier. Like, but maybe they have like certain stuff. Like, let me see. Let me just log in and I'll show you which one I have. I have like a Disney subscription that's like Hulu and HBO. So
Okay. I get Paramount Plus for free because my Amex. And well, that's actually a lie. I get Walmart Plus for free, which is actually very nice. If you just need something quickly delivered and you don't want to go through Amazon because Amazon forces you to do Whole Foods, and sometimes Whole Foods, you know, and it'll cost extra. You have like a limit. But are you ready?
Yeah.
Let me know when you're ready to share.
Yeah, go ahead, share it. So this is what I have. So I have Disney Plus, I've got Hulu and Max bundle with ads, and it's monthly. Okay. Here's one secret if you really want to mess with these guys. Just once in a while threaten to cancel, and basically they're like, "Oh, do you want 70% off?" Yes. Yes, please. And so my cost per month has been like this. Check it out. Basic with ads like $9 a month. Basic with ads before was $2.99, $2.99, $2.99, $2.99, $2.99. I'm about to go cancel and do this shit for $2.99 again.
Well, that's what I did with our Airbnb. So when we signed up with our Airbnb for Comcast, I forget what it was, but my buddy is like all hyped up. He's like, "We need to get the nicest internet, bro." And I'm like, "Dude, we don't need 800 megabytes per second." But now things kind of do need, you know, and so I forget what it was. They just kept raising it, and I called like, I forget what it was, 6 months ago. It's like, "I'm canceling, bro. Like, what are you doing? This is absurd." I'm like, no. We'll give you the gig package and save you $50 a month. I was like, "Okay, cool."
But yeah, 2025.
I mean,
Wait, what is this from? This is from like last year. I have to see what my new one is. All right, whatever. Subscriptions. Oh, I think it's because I'm paying it through Disney or something like that. Yeah.
I'm kind of happy to share this with you, Chris. Let's check out the portfolio and see what your thoughts are, because we've been trimming a good bit on some of these things. Let me just make sure. Yep. But things have been looking muy bueno in the portfolio.
Yes, sir. So we did a couple of changes. So you know what? You go ahead, Matt. You explain the changes.
So we sold some Venture Global. I think we trimmed 25% of that. So we used to have like over 300 shares, to which we sold some. So so there was that. And then I think we bought, I'm trying to remember what we bought with it, Chris.
TPG. TPG.
Yeah, TPG. That's what it was. So TPG for a little bit of fixed income. Obviously, we're seeing a lot of love today from ASTS and Rocket Lab. Those have been pretty well performing. Might have to have a conversation whether or not we trim any of that. I personally think, I guess it really depends on what you're looking at in terms of, are you holding for long term, are you trading, etc. But there's that. I bought one Bitcoin ETF share today to get our cost basis down a little bit, because we had like $230, and I said, it's only $30. Let me do that. I think the only black eye we have is me trying to sell a covered call on VG, and that obviously ran. So I might roll this to the 20s, because we're getting within 17, 18 days.
Yeah.
So it's I'm not really too afraid that it'll get called away or anything like that. I think you could easily roll it to the 20s and for next month and probably be fine. But worst case scenario, it's only $260. So it's not like, this negative 1,000 or 1,100, not so scary when you look at it from a total value.
Yeah, of course. Of course. No, I know Fidelity, like I said, man, Fidelity has this stupid thing where we only got 10 cents for it. That's our cost basis.
Yeah. I forget when I sold it.
Okay.
Yeah. I didn't sell it at the best time. That's for sure.
It's all good. Whatever. So it is what it is. No, I just think, you know what? We should be rotating some of the money to like some names like Microsoft and stuff, just high class the portfolio. So we spoke about taking some L's. So we definitely took some L's on things that we didn't have as much faith in, like Webull. I think we had Webull. Right. Yep. So we took a little bit of money off of Webull and we said, look, let's just realize the loss right now. There are opportunities that I think we have a little bit more confidence in. So, until it's not like we're waiting till the end of the year. So one of the things that Stanley Druckenmiller spoke about is that if you have losers, just learn to how to cut them. Don't be like, oh yeah, I think this thing is going to get back to this. So Webull was not proving out to be that great of an investment. They're not really performing that well. And on top of it, you've got all sorts of issues coming with just the brokerage industry. So it's like, let's take a little bit of money, let's deploy it in more higher conviction stuff. So we did that. So we did buy some Microsoft, as you can see at the top, and that's down about 8%. You think there's anything else worth adding right now other than maybe some Microsoft?
I was wondering if I was hoping that Amazon would take a little bit more, because we have both the double X of Amazon and regular. I'm not sure if you just want me to sell the double X and just move it into the main Amazon, or spread it amongst Microsoft and Amazon. Man, I would hate to. The thing that I actually would love to probably do, which I've thought about. I just know, and I'm going to kick myself, that Next at some point is going to have a massive move.
I agree. I 100% agree, because the minute that they start turning their cash flows on, I think this thing rallies at least twice, like double from here. At least.
And that's part of it. Like, I almost like have been thinking about just buying another 10,000 shares, even if it's going to cost me 20 grand extra compared to where it was literally last week. Because I just look at it, and I've told people this, like, because I told people when I invested in Next, there's a lot of people that have been like very patient with me. And I was like, I want you to know, like, 10 years. And they're like, no, I get it. I'm not even going to ask you questions. And so like I'll every couple months, I'll just like tune them in on like what my thoughts are, just because I know they have, like, it's a lot of money to them. It's not a lot of money to me, but it's a lot of money to them. And I'm like, just so you know, like, this is my thought process. And like me talking about it and like walking through it and typing up my article on Probably, like, the window, dude, like when we first started talking about this was so long away, and the window is really not that far away anymore. Yeah. It's like, and now that I'm thinking about it, it's just like, all right, things are progressing. Like, I'm hearing rumors from Bechtel employees that like it's going really well. It's not that like they're going to underspend or anything by billions of dollars, but it's just going really well. Like, it's going as expected, which is rare for an LNG project. And it's like, if that's the case, like, the big risks of this company going to zero are disappearing very quickly. And it removes a lot. It's like, okay, so maybe you invest and maybe you don't, like, originally it was like you invest and it actually goes to zero. Now it's like you invest and maybe you just don't make your money in a very long time, and it just kind of like, but I'm just like, sorry,
this should have been a bullish as hell signal for us when Hanwha, I told you that South Korean defense contractor, they ended up buying a crap ton of capacity. They bought a crap ton of shares, and then they bought capacity. I gotta hit, like, the South Koreans are smart. This is where I get pissed off at the Indians, man. Reliance has enough money that they could buy a significant chunk of these companies and then take long-term fixed contracts. Like, And right now, they're going to deal with this high thing. But here's the one thing that I think that could be bullish for us. The idea that you can be solely dependent on Qatar, even if this thing gets resolved, is completely out the door. I think that people are going to be willing to pay a premium for GOM than they are for Qatar. Even though Qatar will probably give you better pricing, people will like, I can't deal with the volatility of this Strait of Hormuz bullshit anymore. I can't deal with the instability that we see with this. And instead, I would rather get my LNG from the GOM. I would rather get my LNG from Guyana. I would rather get my LNG from other places, at least to make sure that I have a diverse supply
Portfolio.
Right?
Yeah.
Yeah, that I'm not 80% Qatar and 20% everyone else. And then shit happens at Qatar, and now I'm scrambling on the spot market, paying 5 times the price. This is the second time this shit's happened, you know? And if anything, this kind of makes you realize just how vulnerable it is to be dependent on a narrow strait for things. So if, let's say, this whole situation resolves itself without any regime change, which is exactly what I think we're probably going to end up getting, then there's always going to be this giant specter on top of every counterparty, whether or not they're going to ever be able to get their LNG. And the fact that Qatar had to declare force majeure is a strong sign for NextDecade and for Venture Global that any future capacity is probably going to get bought up, and they're not going to have any trouble financing that shit.
Well, I think it's going to be very telling if, and I need to go through and check. It's like, I'm trying to remember what train you said Hanwha was bought from. And maybe it's in their most recent presentation.
5 and 6.
5 and 6.
Let me just check right now.
Because initially when they were doing trains 4 and 5, they only sanctioned like 75% of the train. And that's technically what they needed to be able to get and underwrite it. So there's that piece. But I think the one country that I'm looking to, Chris, in all of this, and first and foremost, I need to correct you on something. It's not GOM anymore. It's Goa.
Goa, right? Gulf of America.
I'm just fucking with you, but it was obviously used to say GOM a lot in my day job, and now we say Goa, which surprisingly didn't take that long for people to catch up. Are you sharing it?
Yeah. I see. The thing is, when you say Goa to me, I get confused.
Oh yeah, go south to Goa.
Go to India, yaar. Go to Goa. Let's go, yaar. It's gonna be great. You know. So
that's what everyone made the joke about initially. Sorry.
So right here, they've got close $6.7 billion of project financing for Train 4. Now they have Train 5 for fully funded for Train 5. So they've got the money to do it, to go up there now. Amended corporate loans going forward. So this whole thing that we're going to have a supply glut in the back half of 2020, the 2020s. Kiss that glut goodbye. Thank you, Iran, for blowing up some of that capacity over at Qatar. So now the Qataris are like, hey, listen, guys, it's going to take like 4 years, 5 years for us to get back to full capacity. So in the meantime, these guys are going to be able to print money. So I don't think they're going to have any trouble.
Did they just buy shares or did they get a contract? I'm trying to remember.
No, they bought shares. They bought shares hand over fist.
Okay, so now they have over 10%.
Yeah. Which is why they had to declare. Look at this.
Wow.
Nothing but nonstop buying.
Okay, I thought that they were getting they signed. Okay, so they just bought more shares. Got it.
Bro, CEOs buying, directors are buying, Hanwha's just been on a tear buying these guys up because the Koreans are smart. The Koreans know if we buy into this project now at a cheap price, then we contract with them fixed costs later in the future. Any of the dividends that we get paid and the equity gains that we get paid, it's like you're getting a giant discount.
Yeah.
You know what I mean? It's like you go like, okay, it's like my wife. She goes to Starbucks all the time. So I'm like, just buy some shares of Starbucks because every time you go, you're pretty much getting a discount. At some point, the dividends are probably going to pay for your coffee every day. Right?
Yeah.
So
No.
these guys, they're smart. They realize, hey, this is going to be one of the biggest LNG terminals in the entire planet. And you're getting to buy this at what, $1 billion, $2 billion, which by the way, makes sense because their ownership over the first 3 trains is not a lot. But it's those other trains that come after that, 4, 5, 6, 7, that they have major equity stakes in, that are being financed by debt while they retain most of the equity, which means that from a dividend perspective, you as a shareholder are going to get crap ton of cash flow.
Yeah, like the $2 billion market cap right now is not the reason I'm buying it. Like if you're buying it for trains 1 through 5, that's not where the money's at. The real money is when you get into 6, 7, 8, 9, and 10. And it's very interesting. So to give Chris, like we jumped around a lot there. I want to reiterate something. So the force majeure piece from Qatar, it's not the 13 MTPA that is the concern for Qatar Petroleum. It's the fact that they had so much resourcing to allocate to their North Field, where they do a lot of their production from, and then they export from. The expansion projects were going to start up in 27 and 28 and 29 and 2030. Well, where do you think all that capital and human resourcing is going to have to go now? It's going to go back to the 13 MTPA. So no longer are you going to be able to expand from the 85, 90 MTPA that they were in terms of capacity to over 125, 130 in the next couple of years. They're going to be having to replace and, go back in time pretty much to fix what was already broken. And so it's not necessarily the fact that we've lost 13 MTPA. It's more along the lines of that you've delayed out the supply curve out into the later half of the decade. And so it allows the demand to kind of catch up a bit. And so when people are starting to say, man, are we only really going to get $3 spreads for our spot contracts? And that's not the best. It recently, prior to the war, even crept up to $8 spreads just for TTF, right? Just for Dutch facilities, not even talking about going to Asia or anything like that. And now you're talking about spreads way north of 10. So it's in that respect looking pretty healthy in terms of the margins that are potentially going to happen. And a lot of this, I think, was forecasted at like 5 for a lot of these cash flows coming in. And so now if you're going to be able to potentially take advantage of some of the spot pricing, which the uncontracted volume is what you need to take into consideration, the orange wedge, because the blue is basically already under normal contract. So anyway, that orange wedge, if prices stay inflated here, is going to be able to grow, and you're going to be able to pay off debt much faster and or accelerate the future trains. And so what Chris is basically trying to say is like a key thing. If you're just talking about the first 3 trains, the first 3 trains is a 17.6 MTPA facility, which is a big facility on its own. But like Chris is stating, they only own 20.8% of it. So in real terms, that's only a 3.66 MTPA position. It's not very large overall. And so if you were to put kind of like a long-term price on that, it might be worth $3-4 billion just for that position. But then you're talking about approximately 50% ownership in trains 4 and 5, give or take. And that's going to be an additional 12 MTPA. So that's going to add you another 6. So trains 1 through 5 is probably going to be worth anywhere between $8 to $10 billion market cap. But then that's when you talk about the 100% ownership in 6 and 7 and 8 and 9 and 10. And those are 6 MTPA apiece. So just adding train 6 but this is the entire facility, right? So just adding train 6, if you think about, is literally 6 MTPA. That's 2/3 of the entire MTPA equity ownership of trains 1 through 5 for NextDecade, because trains 1 through 5 is just about 9 MTPA in total for next decade's ownership. So that 30 MTPA, they'll only own 9 or so MTPA of that. So a little less than a third, because the majority of it's taken up by trains 1 through 3, and they only own 20% of that. And so then you start talking about train 6, which is 100% owned. Then you're talking about growing the entire equity ownership just in one train by 2/3. So some food for thought.
They're basically going to start generating cash flow at the end of 2027, which is literally like a year and a half from now. And incrementally, that cash flow is going to grow, right? And eventually, they're going to do about $1 billion of distributable cash flow. But most of that distributable cash flow is going to go right back into trains 4 and 5, where they have a bigger equity stake. And then eventually, it goes into trains 6, 7, 8, and 9. And so you get this kind of like that scenario happen, right? So let me just bring it up right now. So right here, if you see the contracted capacity, about 90% in phase 1, 4 and 5 are 77 and 75% right here. So the contracting, you still have another 25% in spot left over here. So just in case you get any sort of spikes, you can take advantage of that. Their ownership summary is right here. You see this? Trains 4, they have 42% equity, Matt. So they have 34% equity in phase
No, that's
1.
the financing, Chris.
No, right here. So phase 1 is financed with 66% debt, 34% equity, right? And the equity that they've sold to some of these other guys, right, is in there. So we have to see what next decade's economic ownership right here.
I was just talking through it.
Was it? Oh, I'm sorry.
Were you listening?
I was trying to figure out from a distributable cash flow how much that they were going to have.
Oh yeah, there's a slide on that particularly. It starts off at about, for trains 1 through 5, it's about $500 million a year, and then it grows to 800 million. Where is it? It's in there. It shows specifically trains 1 through 3, and then it growing.
Yeah. That's the thing that I wanted to see. Trains 4 and 5. Did they get rid of that thing? Let's see.
No, shouldn't be.
Come on. This is the construction.
It's slide
scale.
9 on the most recent presentation.
Slide 9? Okay. Okay, here we go. So total production is going to be right here. Distributable cash flow after everything, the mid is going to be about 0.8. So you're right. It's going to be train 6, 7, 8 that are probably going to generate the most amount of revenue. Return for these guys.
But if you think about it, so think about it this way: trains 5, they only own 20% of. So that's 3.6 or so MTPA. Sorry, let me talk about it in whole terms, because I guess they have it in whole trains 1 through 5 terms. So I'll talk about it in that term, because it's 45% times 45 times, I think, right? Yeah, times 12 plus the 3.66. Okay, so generally speaking, from trains 1 through 5, initially they'll only have like 9 MTPA, and it's going to graduate closer to 10 MTPA after it flips there. But like you're kind of seeing there, each one of those trains is likely afterwards, because you have that initial kind of facilities costs that you have to run through, etc. Each one of those trains after, at 100% ownership, is going to be, I think, close to $500 million in distributable cash flow. So, because you see, it's not a very large move, right? In terms of how much ownership you're moving trains 4 and 5, and that's a $300 million difference, right? So the first trains, like the first part of it, is really the fact that you kind of have to pay for the initial kind of operating costs for the facility, and then once it flips, it then becomes very profitable. And so you're kind of seeing initially that 0.5 there is actually only 9 MTPA, but then going to from the 9 MTPA to closer to 10 MTPA ownership in trains 1 through 5, that's where you get the 0.8. So if you think about that, then think that every ownership isn't 10 MTPA of each additional train. It's only 60% of that. But think about 60% of 0.8, right? I mean, that's a large chunk of money. And so if you're able to say, put that in and install that for $5 to $6 billion, which is probably going to be the rate of cost for those particular facilities, then you're getting an additional $500 million a year in distributable cash flow. That's pretty beneficial. So you start to think you're starting at 0.8 and you add an additional 5 trains at $500 million a piece. I mean, you're talking about eventually ending up at over $2.5 billion of distributable cash flow if they own 100% of those facilities. Now they could, for, to get them online faster or to de-risk themselves a little bit, they could sell, just like they gave up part ownership in the first 3 trains. And then same thing with trains 4 and 5. But I think because of the cash flow they're getting from this, they'll likely hold ownership of those 100%, because that's where the real money is going to be made. And so I think that right now, this is the kind of pivotal point. You've sanctioned trains 4 and 5. You didn't dilute. You're within 12 months. And Chris showed that 4Q 2027 timeline. That's when it's completed, right? So there's still going to be commissioning, right? So the commissioning piece is going to start, I think, at the end of the year. They're actually going to introduce gas based off of current timelines. And they're actually going to start exporting commissioning cargoes, just like Venture Global does, right? Because keep in mind, Venture Global, Plaquemines is still not completed, believe it or not. So like it's if you think about it in that same realm, right? So there's still certain parts of the facility that haven't actually been finalized yet, right? They're running on temporary equipment, not long-term power, etc. And so it's going to be the same sort of process with NextDecade. So within the next 12 months, I wouldn't be surprised if you see a cargo going out. Within 15, I'm fairly confident, like 95% confident within the next 15 months, you'll see cargoes going out. So middle of next year in 2027. That 4Q 27 timeline is literally like 100%. Train 1 is sustainable, like not on any temporary equipment, that sort of thing. And to be very honest, like at what point do you start train 2 at that point? Like is train 2 going to start the second half of 27 and then it comes online? I think it said 3Q 28 is like the commercial online date. So I don't know. It's going to be very interesting. So I wouldn't be surprised by 18 months from now if you have pretty much a full train 1 facility up and running, maybe on some temporary equipment, but likely full export capacity on commissioning cargoes, and then a commissioning train 2. That'll be a lot of fun to see.
Yeah, man. No, it's interesting. Like, this is the thing with MLP companies, like that are like MLPs, but midstream companies, like, are they capital intensive? Absolutely. But once you get past that initial capital intensive part of the investment cycle, you're just generating money and just printing. Like, look at which was Steve's favorite? EPD. Look at this. Enterprise Product Partner.
Yeah.
Literally you're just printing money. You're getting literally a 70% return in EPD, just stock price, and then you collected dividends all along the way.
The thing that I think is, so go back to that presentation really quick, Chris. There's a line in there that I need people to see.
Which
so
one?
the third. Yeah. Sorry. It might even still be on this one. I don't know if it's on slide 9 or. But basically, there's a single line on there that's underneath all of this. So you see the 0.5, the 0.8, which is the distributable cash flow. right underneath, the impact of half a dollar's worth on MMBTU change in next decades, because this is assuming $5, right? Right now, it's at closer to 10 or closer to potentially 12. So let's just say it evens out at, let's say, $7 or $8 instead of 5. This is going to have an additional $150 million a year distributable cash flow difference, like that alone. And yeah, that's what I think people need to kind of potentially realize, is that's why people were trying to sell out. That's why people were thinking it was for dead.
I wonder what would happen if Iran took out South Pars in that facility.
I don't even want to think about it. For anybody, so South Pars is the large facility that sits in between Iran and Qatar, where a lot of the LNG comes from. It supplies about 80 MTPA of the global
largest
production.
natural gas field in the world, shared between Qatar and Iran. So right here. So you see this giant thing? This is what Qatar basically gets all of its LNG from. The thing is, if you go right here, this is North Pars. So Iran owns this part right there. Let me just actually show the line of control.
Yeah, no, it's. I think there might have been. I think that lease line might be that fourth picture.
There you
go. The fourth picture. Okay, you can share that. Yeah.
There we go. Right here. So 20% of the global LNG supply comes from here. And so this right here, this is the North Field that Qatar owns. And then this is South Pars, which is what the Iranians are. So it's like a joint situation for them. Now, the facility that does the liquefaction is Ras Laffan LNG. And this is the largest thing in the world.
I actually don't know how big it is.
Let me see.
In terms of MTPA capacity. I know they're doing like Northfield expansion and stuff like that, and that's what a lot of major companies were getting involved in. But like the actual export capacity, I'm not 100%.
Let me see if I can find it.
Looks it said 77, or was that just Qatar in general? It might have said it in the first line. Yeah, 77.
Ras Laffan, the world's largest LNG facility, typically has production of 77 million. They were supposed to expand this to like 120, something like that.
Yeah,
or no, right here. The site also included gas to liquids helium plants, which expand to.
This is what I was talking about. So you had it right there, Chris. It was perfect. It was 140 some MTPA by 2030, and so that's kind of what I was referring to earlier. Like, it's not the 13 MTPA that was the impact, right? The 13 MTPA, yes, that sucks, but you have to think they're trying to grow by 20 to 30 MTPA, like for the next 4 to 5 years. And so if you're delaying that because you have to fix this 13 MTPA, that's why the glut is just disappeared, because originally you went from expanding by 20 to 30 MTPA next year to now having to focus on just getting their main facility back up and going.
Critical turbine shortages expected to delay. Wow. LNG capacity by 17%. So it's about 13 tons per year that they took offline. That's pretty big. That's like one Calcasieu Pass.
Yeah. No, yeah, it's 100%.
That is a Calcasieu Pass that they took off online.
That's equivalent of the tenth of what the U.S. produces.
Yeah. Huh. Wow.
So it's not that. I mean, that does suck, right? That's an immediate impact. But
Yeah.
the fact that now you're delaying while demand is starting to increase like crazy.
Yeah.
It makes me think, man, like I was actually thinking about this earlier today because I'm paid to think like this. Is like, what's Australia doing in this situation? Are they sitting there wondering, because they're very much into the regulatory space about lining with the Paris Agreement and things like that. And they're just sitting there being like, well, we need to help our friends, literally. Japan, we need to think about Korea. In a time like this where they potentially need diversification of supply. And will they potentially be backfilling a lot more?
These bastards, man. These bastards got so lucky buying Tellurian for a song and a dance, bro. I cannot believe these bastards. They robbed every single Tellurian shareholder. Suki is probably rolling right now, just pissed off. I honestly, I feel so bad for every Tellurian investor who basically wrote out 10 years worth of pain only for these guys to buy out Tellurian from under them. And then now they're going to sit on a fully FID project. I think they already started construction, right? Did they?
They were going to. I think they actually paused it, but I wouldn't be surprised if they restart it. But I think Woodside doesn't give a crap because Woodside, I think, has pretty much gotten their cost basis back from Stone Peak.
Yeah, because they sold the equity. And
I think Woodside also would like to downsize more potentially.
Okay, Chris.
It's just a lot of money, man. It's just a lot of money.
Yeah. That's sad, man. Back in the day, this thing used to be called Driftwood. What's his name from Dustin Dollars? I think he was a big investor in Tellurian, yeah. I don't know. I just have Woodside. So this was the original facility that they were going to do. It was going to be 16 MTPA and potential expanded to 28 MTPA. When you think about this, man, just think how big Venture Global is going to be. Like the total capacity of Venture Global is the economy of Qatar.
Why do you think I bought it at $25? I was like, it's cool. It goes down a little bit. Like, I get it. Like, I knew it was going to be like $120 billion company. So I was like, it's a guaranteed place to put money. And so then when I wasn't going to throw a lot of money at $25 and I didn't, but I think I might have thrown like 10 or 20, like, I don't even remember what it was. It wasn't a lot. But so when it dropped to like $18 billion, $20 billion market cap, I'm like, all right.
Yeah. So this is the Venture Global. Let me see if they updated their thing.
In the appendix, there's a really good slide for it. Exactly what I know you want to share.
Okay.
So just go immediately to like the last 4 slides. I think it is
4 slides, or is that appendix right here?
Yep. I think it's
right
one
here.
slide next.
Yep.
Or that, yeah. That's today.
That's today, yeah. So 81 MTPA with additions of Plaquemines and CP2 bolt-ons, not including CP3. CP3 is another monster that's going to take them over Qatar.
Yeah, that's the next slide, Christopher.
Is it? Where is it?
No, you just skipped over.
Right here. Yes. It's in development. Hell, they could even bring Delta back online eventually in 2035, in which case then you've got 200 MTPA plus.
Then you're talking about $150 to $200 billion market cap company at that point.
I told you, you're basically the economy of Qatar. With distributable cash flows around 10 billion a year. Monster.
Yeah, I'm curious to see like how much when you start to get CP2 online and commissioning, what the eventual goal is. Like, where do they stop the debt? Are they going to be generating enough where they're paying back where they can kind of flatline at 40 billion? Because then
Yeah.
if you think about it, the EBITDA at that point will be close to 10 to 12. And if it's 10 to 12 and your debt is at about 40, the debt to EBITDA is really not that bad at that point. It's like a 4 to 3.5 to 4.
I mean, they're going to be
That's manageable.
They're going to be making so much in margin. They'll keep the debt because they'll be able to finance the debt at like 5-6%, whereas the earnings that they have on just their reinvesting their capital will probably be 10, like maybe 15-20% ROI. So it's like, why would you want to pay down the debt? It's like ExxonMobil has a ton of debt right now. Why would it get rid of that debt? When it generates more money just buying back its own shares.
Yeah, what Chris is kind of referring to is like, if you're getting a return on capital employed of 20 or 30%, and you can borrow the money at 8%. Same thing with me. Like if I was able to find a project where I'd be guaranteed to make 20%, I'd take as much debt on as I could.
Yeah.
To reasonable levels, of course, and invest in it.
The goal for Venture Global would be to get to three times EBITDA, basically. Because once you go below 3 times EBITDA, you're investment grade, which means you could borrow at prime rate, right? So, and in the future, if you get sort of a deflationary scenario, which is what everyone is looking at because of population shrinkage and everything else, they'll probably eventually be able to borrow at like 4 or 5%. And with these long-term fixed contracts, they probably make 20% ROI on just share buybacks. So yeah, it'll be interesting. Look at Cheniere right now. What's Cheniere's market cap?
50, actually it crossed back over 60 billion.
60 billion. All right, I'm gonna go use the bathroom. I've been holding it in for like a good 20 minutes.
You're the man. Can I just share? Do you want to leave? I can share the quick what we've returned.
Yeah, go for it. Let's just look at the share returns real quick.
All right, share returns, people. There they are. Read them and wait. Year to date, 27% compared to a 4% loss, and we were up to something percent today. And then 1 year we're at 58 compared to 15%. Doing pretty good.
We are killing it. So
we took a risk putting and doubling down in Venture Global and NextDecade and getting our cost bases down, but it's paying off.
The goal for this portfolio is to always be up 3 times more than the S&P 500. That is the ideal goal. If we can beat the S&P by 3x, we're golden. So every investment that we have to make, we have to swing for the fences up there just to keep beating the S&P. Or
I mean, generally we just always want to be 25 to 30% not year to date, because that obviously is dependent, but like 25 to 30% in the last trailing 12 months. It's kind of our goal. I mean, yes, I mean in down years we want to at least shrink the amount that we lose, but that's kind of the hope.
Well, that's why you got to rotate into like fixed income and stuff like that. Like, so this way, what happens is if the market is going down, you actually have the money and capital to buy stuff back. I mean, not buy stuff back, but buy into things that are less asymmetric at that time. So like right now we bought Microsoft. We were able to buy Microsoft because we had some cash flow coming in from the Brookfields and everything else that didn't take nearly the amount of pain that the general market did. Right. So, all right, I got to go.
You're the man. Thank you all. I'll stick around for a minute or two. What is this last question? Chris and Matt, how much of the YouTube portfolio is affecting your own personal portfolio? Some, a little bit here and there. We'll take Chris off just so that in case he says anything, if he comes back, I'll keep an eye out for it. But yeah, sometimes we have stuff in our personal portfolios and we discuss it, and Chris generally manages things. I'm more of like a yes, I agree, no, I don't agree, or why. I mean, I was a big pusher in Rocket Lab, so that did really pretty decently well. Bitcoin did really well at some point when we were there, but obviously it's gave back all the gains right now. Have you thought about buying Bros? We bought Bros in this and sold it when I think it was. I'd have to go back and see, but we profited pretty well, I believe, on it. So that the part of this portfolio is like it's very different than my personal portfolio because I don't sell things very regularly. What was Chris saying? Yeah, so I mean, prime examples. Chris just reminded me, like we bought some things recently, and so it's like you kind of have to keep up with the portfolio because it changes regularly. We're not holding things for very long. Like we said, we're trying to kind of manage this portfolio. Like I don't manage my portfolio as much as what we do for this. So key examples of closed positions for the year 2026. We trimmed ASTS. We've trimmed Brookfield, both Brookfields. We sold Bull for a loss. We've trimmed some Rocket Lab. We got like 20 something percent on Verizon very quickly. So that was this 2026, and in 2025, we trimmed more Brookfield. I don't know why that Bitcoin. I must have shaved like a small percentage off. We trimmed Carnival, Celsius, Hims for a profit, NextDecade for a small profit, Nubank for a profit, Oscar for like a 20% profit. SMCI was basically break even. UNH last year we sold for a pretty decent chunk of change. We were buying it at like 350 a share. Sorry, no, we were buying it at like 305 a share. We sold it at 350 a share. We tax loss harvested a little bit of Venture Global at like the $16 range. So when we were coming on the way down. So yeah. I thought we had Bros in here at some point. There we go. I guess we only had a couple shares of Bros. I know I personally have never sold any Bros. I still have some, and I'm adding again. So I'm still up like 80 odd percent from a lot of my initial shares. I was buying at 25, 30 bucks. So, but anyway, you guys rock. Do I have thoughts on Fiserv? I think that they just need to get their shit together, but I think in the long term they're going to be fine. But I guess it really depends upon what you're doing with it. Are you trading short term? Or are you holding it? I think in the next 2 to 3 years, it's going to be on a rebound. But between now and the next 6 to 12 months, you know, how much do they actually go in the right direction is, I guess, what's dependent upon that. You manage this portfolio actively similar to the small port. They're completely disparate. We don't sell puts or anything in this account. This is strictly like equity covered calls. I think we could technically buy options, but we don't sell any puts or anything like that in this account. And this money gets added to this account anytime we make money on YouTube. Generally we make like $100 a month from the Cashflow Chronicles channel, just from memberships and people watching, and we generally make about $25 an episode. And that, whenever you get paid, goes into the portfolio. Matt, notice ABCL. Are you still confident in long term? Consider trimming it soon. I haven't kept up with it, honestly, but it's not a large enough position for me to really care about. How much of your portfolio have you allocated to LNG companies? $1 billion. Always question, like, why does it matter with certain stuff like this? It's like I try to understand where people are coming from when they ask questions like that. It's like if I said 1% versus 25%, what's the difference? I know there's like a slight difference in that, but I always just kind of question. It's like, you don't know the size of the other positions and why I have them. I'm very curious as to why people, maybe they're trying to understand like my level of conviction, but no, I've been very explicit. Unfortunately, I was never, once the date was formally announced for LA, I was never able to secure the opportunity to go. I have family coming next week, and they planned it literally like almost 12 months ago to come this week. So unfortunately, as soon as the date was dropped for LA, I thought LA was actually going to be in early March. And so originally I thought I was going to go. And then when the official date was dropped, being this weekend, I've explicitly stated no. And I know for a while, like that wasn't known. Like I kept mentioning it, but I guess line of communication didn't flow through. But yeah, hopefully you weren't going to LA on my accord. Hopefully it was because Mr. Mattel's going.
Yeah, I'm going. Bro, right now everyone should just be high classing their portfolios. That's the way I see it. Just
Fly out.
don't buy bullshit companies. Buy good long-term companies. You're getting them at literally like decade discounts, like Microsoft. You're getting to buy Microsoft at like an 8-year low in terms of multiple. You know, it doesn't take, you don't have to be a good investor to know that Microsoft is going to be just fine over the next 5 years. You know, so if you have any companies right now that are, you know, like losers that are dying and they're getting disrupted and you don't know if they're going to be around in 5 years, just buy Microsoft and pull yourself out of it. You know, I don't think it's that hard.
Should buy like 300 shares of Microsoft here, I think. I should stop being a
If you
pussy.
want to. I mean, look, you need to, you're at the stage of wealth now where you need more Microsoft in your portfolio than you do some of these other speculative names. Because at that point, just the dividends alone from Microsoft will, you know, pay for your Lambo.
What is Microsoft's dividends these days?
It's a 1% right now, but they're growing it always.
1% today. It'll be yield on cost 3%. You know what I mean? In a couple of years.
That's why I bought TPG. That's why I'm telling you, like, we should do an entire episode dedicated towards TPG. Once I share the information with you, Matt, you'll be like, holy shit, we need to buy more TPG.
And I'll just be like, I'm moving all my money to TPG and retire today.
I mean,
What's
I
the
wouldn't
yield
go
on
that
it?
far. 6%, 6 something right now. But
Not
if you
enough.
look at
What about your 15% yielders? Where are those at?
well, see, so the beauty of it is they are constantly growing their fee. What is that thing called? Distributable cash flow. Their fee earning revenue right now is set to go up like crazy over the next couple of years. So you're looking at probably a $3 dividend sooner rather than later. I'll send you all the stuff that I have. So
Not enough. I need it now. Just kidding.
don't be greedy. Stop being greedy.
So full port Microsoft on their market open. 370, bro.
I know.
I didn't think it was going to go below 425.
Yeah. Well, the software is all getting sold off. I wonder how much of this is algos. Just selling off like the indexes with software heavy components, and Microsoft is probably the heaviest component in all of them getting sold off. So IGV don't go up, then software companies won't go up. That if you watch CNBC, you will learn a lot of software is out of favor. Yeah, very curious about the first weeks of April since Liberation Day was. What do you think? You think this is Liberation Day part 2 and we're going to get a V-shaped recovery towards the end of the year?
Towards the end of the year?
Mm-hmm.
I don't even think that. I think
Or toward the middle of the year, you think?
I think maybe in the next 4 to 6 weeks, we'll see a recovery in a lot of different areas.
It's not bad.
Actually, I should probably hold that. I mean, I think when you start to see earnings coming through, one of two things is going to happen. People are still going to be shook about the amount of capital that's being spent, or two, they're going to start to see some of the revenues coming through and jumping through. I think it's going to be the latter, but I wouldn't be surprised if people are still scared about how much CapEx is being spent.
Yeah, that makes sense.
We don't have long. I mean, you think about it. I mean, the quarter closes here in the next 5 days. So by the end of April, we're going to start seeing earnings reports again.
Bro, I'm not looking forward to this meetup. Not because I don't want to meet everyone, because these damn TSA lines are going to freaking be killer, bro. I have an early morning flight tomorrow, and some people were reporting 3-hour-long waits through security at the airport. So even though my flight's around like 9 a.m., I'm literally going to be there at like 5 in the morning just to get through security because of this whole thing with the TSA.
Yeah, I'm curious. My sister flies in on Saturday. I wonder how bad it's going to be in Philly.
Yeah.
So,
because then I'll have to do the same thing when I'm flying back. Let's see. Yeah, I just checked in. 8:55.
all packed.
Nah, I got to pack after this.
You bunking with Steve?
I'm staying at the same hotel, but I'm not bunking.
Oh, no, I'm just giving you shit.
Yeah.
Well, that'd be good. Get some lunch with Steve. He's got some stories to tell. You got to help him with life. He's got to help you with life.
Steve is just gonna try to convince me to buy some. What is Steve recommending these days? What does he love?
Salesforce.
Yeah.
He's backed off of Salesforce a little bit. Actually, I was on his stream the other night when my eye was feeling a little bit better. I think it was like Thursday or Friday. It was the day after I canceled on you, I think. And dude, Wednesday was not a good day. I was like afraid I was going to lose my eyesight. I was like, I don't want to be on stream right now. Like, it was like a frosted glass like on my right side of my eye. I was like, but Thursday I actually started to get my vision back, so we're good. And now I can see, like, it's just I'm not wearing contact in my right eye. But anyway,
you got the pink eye. So that's what happened. Pink eye.
I don't know. I woke up on Sunday last week and it kind of hurt. And I put in my contact. I was like, it'll go away.
Yeah.
And then it probably exacerbated the situation. And I was midstream with Steve and I was like, what the fuck? And I like turned off my camera and my eye just was not having it. I put in a different contact, a new one, because I was like, maybe it's ripped, whatever.
Yeah.
And then it still kept hurting. And I was like, I got to take this thing out. Monday morning, I couldn't sleep. I went to the ER and they were like, oh yeah, like you have a small slice in your eye. And just like that, I wish I was at a party. Somebody's like, Matt was eating butt. I was like, I wish I was eating butt. Like it'd be a better, but no, like it literally took that quickly. They were like, it's just a small impact. So then they gave me some antibiotics. Wednesday, I went to go see my optometrist, my normal eye doctor. And she was like, you have an ulcer. So like an actual like infection going on. And she gave me stronger antibiotics. And I was afraid. Like by that time I was still really white and fuzzy. Like looking at my eye, it looked like a glass marble. Just looked gray, like all over, red, people kind of like now, but like severely red. Looked like my eye was about to fall out. And then by Friday I started to see again. And then over the past 48 hours, it's just been really good. Now I'm just like, oh, I forgot to put my contact in. Like for a while, I was like, am I going to fucking lose my vision in my right eye, bro? Like, it was kind of scary over just contacts. So I think I'm going to switch back to glasses for a couple of years. I'll have contacts if I need, but.
Which contacts do you use?
AccuView?
I have these. 1 second.
But yeah, I can see you guys, so like I'm good. But before, like she was like waving her arm, I was like, I can see a shadow. But like she was literally like this, and I was like, I could maybe make out a finger.
I have these.
It was insane.
These are the Air Optics, like Aqua. I never have any dryness. They're really good. I love them. They have like the night and day, so you could wear them extended periods. They're really good. Yeah.
Yeah, I think I need to pull a Chris Camillo, get some nice fancy glasses.
Have you considered LASIK?
Dude, I'm afraid of anything touching my eye. The fact that I've been able to handle these eye drops and not like get afraid, it's probably because I'm like, I need to fucking not lose my eyesight, so I'm just manning the fuck up. But putting in contacts for the first couple times was awful. So the laser touching my eye? I don't know.
I considered it, but I work in radiology and my eyesight is the most important thing to me. So after that, I just said, nah, I don't want to be in a position where I get halos and all this other stuff. So it's funny, the other day, me and Amit and Sam were on the stream and everyone makes fun of Sam because Sam like blinks like 100 times a minute. Like he'll be like, so, hey guys, I think And it's like, so then he finally said it. He's like, he's just very self-conscious about his blinking because after he got LASIK, he's got a lot of like dry eyes. And the thing is, like, when you're in front of the camera and you got the lights coming from everywhere, it's one of those things that just, just keeps coming at you. So yeah, don't want to be blinky like Sam. Don't, you guys are assholes, bro. You know that's one of his things.
Is he going to be there this weekend?
Yeah, he'll be there.
Good, because he's on that side of the world, right? So
yeah, he lives in LA.
That's good.
So
how is he still doing the wolf stuff? Or I haven't seen it. I've been locked in on work. So
yeah, no, he's been doing his wolf stuff. So
can I say something? So you've watched Succession, right?
Mm-hmm.
You've watched like all 4 seasons, everything to.
I saw most of season 4. I think I stopped watching after the Vulture acquisition, where what's his name? Kendall came in and just fired everyone. And remember the guy, that Chinese dude that was like, "Oh, I'm here to like rustle up the chicken coop or whatever," and then at the end of it, he just fires pretty much everyone. Yeah, right. That was like one of my favorite episodes. It was just like,
Anyway, I've started to like view life almost like through that lens of like, it's not personal with anything; it's business. Like just. Mm-hmm. Always forward, never back, like fuck it, like whatever I need to do to like make everyone think that, so it's been a lot of fun. I'm like having fun with it again, which I not that I didn't have fun at work. It's just I'm viewing it slightly differently. I'm like, it wouldn't be that bad to go further up in an oil company and like be flying around and going to Sarah Week and going to the Middle Eastern conferences, and
maybe we should pool our capital together and buy a small private company
like Northern Oil and Gas.
Yeah, we could just buy a good port. I mean, dude, we've got access to the capital. We could if we wanted to. What? Are you seriously thinking about it?
I mean, you got me thinking about some shit.
What are their cash flows like? Can you manage it? Why not?
I don't know if I can manage it, but I can try my best.
Well, you could hire someone who you trust to manage it. I stopped watching Industry. Someone said Industry is way better than Succession. I stopped watching. It got too much about like sex and banging and all the character flaws than investing, so I stopped watching it. Let me work on the oil fields for you. I did watch Billions too. It's sad that Billions is not there anymore. That was like one of my favorite shows.
I didn't like the last season was actually pretty decent, but season 6, like when it was Prince, I was kind of like meh. So, but anyway.
You know what would be a really cool TV show idea? It's called The Retail Investor. And it's like just the life of Amit as he comes up and he gets mugged on the street and they take his last $10 and then he borrows money from his sister and buys Palantir and then Palantir goes to the moon and then he becomes like a YouTuber and then, you got to go with like a little bit with the dramatic, storytelling, right? And then like he makes all this money and then he's doing coke with Alex Karp, I think that would be an amazing TV show.
All embellishment, right? Like
all embellished, of course.
Some of these things have never happened.
And then basically one day he has an interview with like the CEO of a retail trading platform that's called Goblin Hood. It's not Robin Hood, it's called Goblin Hood. And basically, the what is it called? He gets a phone call. I need you to pump my stock. Like, I'll pay you under the table. I need you to pump this thing. And so he gets on, like, guys, we all need to buy Robin. And then it goes to the moon.
Goblin Hood, and then next thing you know,
he makes friends with other retail shareholders like me, who's like, no, you need to sell Palantir because Alex Karp does coke and he's a bad influence.
Stuff like that.
Alex Darp. It'll be another name, like Steven Darp instead of Alex Karp. What, honey? Why am I yelling? I'm not yelling. I'm having fun with my friend. Yeah, they need to change Amit's name. Instead of Amit, it'll be.
Are you renting a car? Or are you just
renting a car? Nah, it's right there.
No.
It's gonna be at the same hotel. So
Okay. You got to get Steve
Yeah.
to get some Dutch Bros. You have to try some of the food at Dutch Bros. We got to convince Boss Lady to buy more Dutch Bros.
bro, I'm gonna have to bring an insulin shot with me if I go to Dutch Bros. Have you looked at the sugar content in that stuff?
Oh yeah, that's why I only drink Americanos from there now.
Bro, there is more sugar in that than there is like. Let me just show you guys how much sugar.
Some of them are 400. I mean, they're delicious. Don't get me wrong, but 400, 500 calories. Some of them, sometimes more.
Like, okay, so let's just share screen.
But I had their cake pop the other day, Chris. Jesus Christ.
Okay. So let's do just this Rebel energy drink, okay? Which is like a very this one. Okay. So you see this iced. Where is the nutrition and allergy information? So these are the total calories, and then saturated fat, trans fat, sodium, total sugars, okay, in grams. So look at, which one did I say? The golden eagle is there. The rebel, mocha, white chocolate.
I should actually look at this and find the stuff that I can drink now.
Right here. 145 grams of carbs right here. Total sugars 142 grams of sugar in their
Not enough.
Aftershock Rebel. And a large Aftershock 142 grams of sugar. That's
Not enough.
crazy, dude. That is how you Aftershock.
Yeah, I moved to the zero sugar Rebels, even though it's probably still not good. But
Look at this. A large Shark Attack Rebel is 168 grams of carbs, 165 grams of sugar. It's so good. I know. This is a diabetic's worst nightmare, dude.
that the Shark Attack is
Dunkin'. They get a drink at Dunkin', and it's like a freaking candy drink because of all the stuff that pumps.
Yeah, I know, honey. Yeah.
the Shark Attack is them amputating your leg because you get diabetes.
I'm telling you, this thing should come with an insulin shot. I had it. It was really good. I had ones, but it was just
Yeah, I
like,
normally get
mean,
the zero sugar ones now, unfortunately.
Oh, that's good. That's good that they have
Unfortunately.
that. That's good that they have that. What's the total dietary sugar recommended per day?
I wouldn't even know.
Sugar recommendation per day. 50 grams. So you're taking 3. Oh my God. For men, it's about 36 grams for added sugars versus natural sugars. Yeah.
Yeah, the zero sugar one tastes like, once you start drinking it, I'm like, are you sure this isn't? But no, you would know if it was the real. I mean, dude, the regular Rebels, bro, are a whole nother level. Like, they are so good. And that's why I think I started gaining. I mean, that's not the only reason I gained weight. I've gained weight over many, many years, but I think I started going to Dutch Bros more. I mean, and I was drinking those, and then just my normal foods, like, you know, you're adding an additional 400, 500 calories a day to your diet, you know, like, it's not good. So
I'm on quick progress note. I'm down to 172 pounds.
dude,
Yesterday, all my shirts are like super loose fitting now. I had to get rid of all my XLs, and now I'm like larges feel like super loose on me now. So now I got to eventually switch to mediums in about a month or two. So
XL is my current goal. So
yeah.
I need to get down a couple sizes, and then I'll be ready to go. But yeah, I was wearing one of my other shirts that I've lost like 2 shirt sizes at this point. And so I was like, why did I ever buy this shirt? And then I was like, oh wait, yeah. I mean, so anyway, doing well. Continue to be on that journey. So
Bro, fitting into your pants is like the best feeling ever. Like right now, I'm starting to like get looser around the waist, which is a really nice feeling too. So we're doing it. We're doing it.
That's been
Hey,
my
don't-
favorite part is like when I went to the UK in October last year, I had bought the pants that I wear now, and they were like barely able to fit. I like squeezed into them. And now I wear the pants that I wear now and they're loose. And I'm like, progress.
Yeah.
So
All right. Let's end this here. Let's before we end, actually, let me just ask you one thing. Do you think we should do a separate fixed income portfolio? Because I want to try to develop more fixed income ideas for people. I think a lot of people are hit that goal in their head in terms of like total number. And I think 5 years from now, we're probably going to be a much bigger disinflationary environment, which means that if you can lock in a lot of great dividend players now, you can sort of just chill. Because I know you've had experience with, because you used to be more of a dividend investor in the past. And
Did
right
I
now,
show you what
hit
I
that
built,
level.
by the way?
No. Oh, I know your dividend thing. I saw that.
How wild is that? It's pretty fun. I'm gonna bring it up really quick. But for anybody, it's free because I know some people charge out the ass for this thing, for these things, and that's fine. I get it. Like, you know, you get your money, boo boo. But it's like this is kind of cool if you could just be like, I have 1,000 shares of SPY. You can add it to your holdings. I think that's in here. And it can kind of like tell you this is kind of a cool thing. You can kind of see. Am I sharing? Yeah. You can kind of see what like months are lower, which ones are higher when you're getting paid out, when the payments are supposed to come.
That's cool.
And the average monthly. But the thing that I like, you get little milestones because you're getting a certain kind of amount. The thing that's really nice, actually, I should show this because I think this is something that people are really like. We'll just put like Apple.
Verizon, put some Verizon in there.
Yeah, let me just get rid of that. So let's do like Verizon, 1,000 shares of that.
Put TPG.
What else do you want?
ARCC. Another good dividend payer. I'm trying to think of some that are qualified. Altria Group. So that's MO. Yep.
Okay, so we'll just do that for now. So you can immediately see what your annual dividend income is font, which is at risk, which I'm working on the at risk piece. Like, why is it at risk?
Because
so
the payout ratios.
I think if you hover over it, it actually tells you a little bit of information, like your payout ratio, your free cash, which I'm still working on. So some small things that I'm like working on. But then it gives you the annual income of each and then the payments, right? Which I think is the cool part. Like you can see when companies are paying, what your expected upcoming payments are. You're making 1,000 a month, the sector allocation by market value, as well as the income. And this is the fun part, is forecasting out in time based off of like what you're doing. And if you're reinvesting or what have you. Now you have to sign up, and it's free. Like I just want people to sign up so they can participate in the feed part, which is like my version of X, right? But like you can put in dividend goals, and then you can get something called like a smoother. So what's like the single stock that we have? I think it's Verizon. So let me get rid of Verizon, and I'll show you what the smoother does. It's actually pretty cool. It's not perfect by any means, but it basically shows like you have a fucking missing month. Like you're not getting any income in the first month of every quarter.
Got it.
And so then it's just like, well, what could you buy? And it's like, here are all the things that you could get to help smooth out your income. Like you could buy UPS, Stag Industrial, ADP Processing. Like these are the things that you could potentially add to help smooth out your income, which is kind of cool. And the thing that's cool also about this is you see where this says drip. If you're logged in, which maybe I should log in, but we'll save some of the surprise for people that want to get into it. But you can tell it, I want to reinvest all my dividends, or I want to grow like the dividends by 2% a year, or 3% a year. and you can adjust it by individual one, and you can see how each individual stock's yearly dividends grow. And so you can be like, the way that I always look at this, Chris, and I always talk about this, is like back yourself into what you need to do today to get to your goals. So if you're sitting there like, man, $1,000 a month would be really great in 5 years, then you can organize a portfolio and you can put in your current portfolio. You can be like, well, shit, I need to add, X amount to be able to get there. So I'm just trying to build people the tools that they need. And hopefully I can be able to put ads on this and help make people some money.
I was talking to my brother about this. I was like, because he has this notion that he just wants fixed income all the time. And I said, look, I'll work on trying to help you build a portfolio that helps you get to that goal that you want. And he's got, he's got 7 figures now. So, and I told him, I said, this is going to sound weird, but the richer you get, the safer it is for you to allocate money. Because what happens is the risk that you have to take to get to that next level is a lot less. So imagine someone who only has 100,000 and they want to get to $1 million. That's a 10x return to get to $1 million. But for someone who has $1 million, just to get to 2 million is only a 100% return, right? So once you hit like the $2 million mark, if you have, let's say, even a 7% income coming in on $2 million, that's $140,000 a year, right? That's like almost like $10,000 a month just coming in after taxes. So get to that level, and then once you get to that level, life becomes fun, because at that point, your bills are all paid, your rent's all paid, everything's taken care of, and you're just basically living to enjoy your life. And if any money that you're making from work, blow it on whatever you want, And the other thing is, if you get into the right companies, the dividends end up compounding. So even if the dividend looks like, oh my God, it's only paying a 3% dividend today, what the hell? I wouldn't want to buy it. But they grow their dividend every year by 10, 20%. You're looking at by year 10, like a 12, 13, 14% yield on cost. So you have to find those companies that have that nice linear trajectory higher with the dividends. So
let's end
any
on
tips
this.
starting from 25? It kind of depends on your age. Like if you're 25, if you have 25,000 and you're like 65, I'm sorry, but that 25,000 is probably more precious to you than a 20-year-old that's just getting out of college, and he's like, yeah, I could take some risks. So for someone in their 20s, shit, take that money, put it into some long-dated calls on Microsoft. If you're 60, put it into some shares of Microsoft.
Yeah. I don't know. To me, I'm always a big viewer of saving is probably the biggest thing that people need to do most of the time, unless you really want to focus on investing and trying to outperform the market. Everyone wants to outperform the market, but I don't think people actually put in the time they need to actually meaningfully outperform the market. And so to me, I think people need to focus more on what they can control. And a lot of that's your income at your job, and stop buying stupid shit. Like, if you like a bunch of there's an opportunity cost associated with a lot of things. Spending time with people, buying this stock instead of a different stock. You need to think about opportunity cost of your expenses. I know so many people, they'll like spend 20 grand, or not really, but they'll spend thousands of dollars on a hobby that they've never done before because they just wanted to like get involved. They like the fanciness of buying something. Next thing you know, they have thousands of dollars worth of sports equipment or hobby equipment that's in their garage that they haven't touched in 10 years. And they're still not happier when they could have just been as happy spending $100 or $200 a month fishing. And so it's like, well, if fishing's your hobby, make that your thing, right? Like if you get 80% of your happiness from just fishing and the other 20%, you have to spend like $5,000 to be able to get it done, then get rid of that other, you know what I mean? Like make your happiness efficient. And so I've seen so many people throughout my life, like do stupid stuff with money. They'll buy a new car, then the car is too nice to drive, so they won't drive it. And then after 2 years, they're like, it's old, so I need a new car. It's like, well, it's only got 1,000 fucking miles on it. Like, why did you even buy the car? It just appreciated by $30,000 from it sitting in your garage. Next thing you know, like they're having to put down money to, you know what I mean? Like, so small things
Yeah.
like that.
I think that guy Palace nailed it. It's like, don't follow or compete with the Joneses.
Yeah.
Yeah. I think that's one of the things that we all get sometimes. And it's hard to resist sometimes when you see people around you, blowing money on things. You kind of want to have some of that too. Like, and I'm never one to shy away from spending money as long as it's something that actually gives me enjoyment. It saves me time. It's something that like I get to enjoy with my wife and stuff like that. So I think one of the things about getting older, I realized making the money has been a great achievement, but it's the ability to like buy things without really, like when I was a kid, I grew up poor. So when you go to Key Food or you go to like Pathmark, if anyone here grew up in New York, you'll know what I'm talking about. We had to look at prices very, very closely. Be like, hey, I don't know if we can actually buy this right now, or we don't know if this is going to be a thing. My dad would get mad at my mom for buying fruit because fruit was expensive. And so, and now I think one of the biggest pleasures in life that I have is like I told my mom, you don't have to worry about, if anything's on sale. If you need something, just buy it. Like the convenience of that is probably an accomplishment that I think is probably more than what it was. So some people, it's like, I guess it's the small things in life. Yeah. Buying
Peace of
stuff
mind.
without price. Yeah. And the other thing is like having the ability to kind of fix problems very quickly is also good too. Like my dad, he went for my uncle's funeral in the UK, right? And he got sick over there, and the system there was just not good. Told my mom that's fine. Flew her out to the UK, stayed in a hotel room for like a week. Then I booked flights for them to come back to India because they wanted to be in India in warmer weather. And he came back and everything else. And the thing is, it was last minute flights, so they were pricey. But, it worked out because I had the money. So I was like, all right, go ahead, do this, do that. It's good. So I think that's the other thing too. So when you start getting into like problems, money has a way of fixing your problems very quickly. So that's the power of money. The money is when you get into a bad situation, money can fix a lot of things. So, yeah.
Yeah. But yeah, I think, it takes 25, like you're in the prime of your life. The fact that you're even thinking about it, and you have 25,000 to your name is a phenomenal achievement. I don't even know.
Yeah.
If I had 25, you could probably go back on the channel. I don't remember what year I started documenting, but I was in my early 20s. If you're curious, like you could see my journey from start to finish. There's probably over 500 videos. Pick your poison. But yeah, I've always been a very diligent saver. And I talk about that. That's one thing. I might have been focused on dividends. I might have been focused on this or that, but saving has always been a large percentage of it. And it allows you to build in margins of error to an extent. So
Someone asked, would be great to hear your thoughts on FIRE and goal planning. I'm not really a FIRE guy, to be honest with you. I like my job. And not to mention, I grew up working my entire life. I don't think I'll ever quit my job. Like I just like working. I don't know. I don't know what to call it, but I'm a hustler. Could you ever see yourself without a job, Matt? Like I know, like you could retire, but
without
like
a job, no, but I'll definitely have something always. Like I've thought about becoming a financial advisor for people. And I was actually thinking about this because I've seen some people like posting their stuff like, why is my portfolio down? Blah, blah, blah. Like, give me answers. Like, you're my financial. It's like, I can't stop the Middle East war. Like, I don't know what you're talking. Like, I don't know what you want me to do. But I was like visioning myself. I was like, what would I be like as a financial advisor? And it's like somebody shows up with like 10 grand. And I'm like, you haven't fucking added any money. You're fucking broke. Add more money. What are you doing? Save more. I don't know what you want me to, like, I can't make it like magically appear. Like I've tried to like imagine me just like losing it on somebody to be like, but like, I'm a very logical person. So sometimes it's hard for me to empathize with people just because my personality type. I have an okay emotional intelligence. I have okay EQ. But sometimes I just like lose it when it comes to a complete lack of logic on certain things. And so I'll just be like, what do you expect? You've only had $10,000 in your account for like 10 years. You haven't added any money. Of course it's not going to fucking grow. Like, that sort of thing.
Do you guys talk about your struggle? What was your favorite struggle meal, and what was your worst, and was your favorite form of entertainment or reward? I think my struggle meal, I wouldn't even call it a struggle meal. Like, I used to choose the lowest tier meal plan when I was in college, and I would just get, like, we used to have a Taco Bell on campus. And I used to just get the 99-cent bean burritos.
Dude, they were so good.
Yeah.
I never understood why they were 99 cents. Never understood.
Yeah.
They were so good.
And at the end of the year, any money that I have left over, you could go to like the campus bookstore and use it up on like Ferrero Rochers. So I would buy up all these Ferrero Rocher things and just give them out as gifts to people. And they're like, oh man, this guy fancy over here giving out Ferrero Rocher chocolates. And I was like, yeah, because I was fucking starving myself to save meal plan credits.
Yeah. No, I mean, I was very fortunate. My parents worked really hard, and we would just eat chicken and frozen veggies a lot. Like, I don't know, like shake and bake and frozen veggies, like with a lot of hot sauce. Like, that was pretty much what we ate, like 2 or 3 times a week. I don't know.
I was lucky. My mom made a lot of food at home. Like, so my mom, like, you know, I'm Indian, so my mom made really, really good Indian food. So I pretty much ate at home all the time. We went out to like Pizza Hut. And I remember I was talking to my brother about this, and I was like, you know, we've made it in life, but I said the happiest moments that I have of my childhood are going to Pizza Hut when they would have these like coupons that would come in like the newspaper or the, you know, stuff. So we would get Pizza Hut, and we would play, and me and my brother would, you know, save up our piggy banks, some quarters, and we would play Samurai Showdown on the arcade machine. And this was in Queens. So I used to drive there with my parents. And so we used to do that. It was legit, man. I had a great time.
The Pizza Hut buffets, or what was it?
No, it was just a regular Pizza Hut. And then I don't know if you guys had this in Pennsylvania. You remember CC's?
Mm-hmm.
Yeah, that was good stuff.
There's
man.
There's still CC's around. I forget what it was. I think I went like recruiting or something, like, I don't know, 10 years back, and I went to a CC's back at State College in Penn State.
Yeah.
Because I was like, fuck it, $5.
Yeah, man, $5, all you can eat cheap cardboard pizza. Oh God.
Sometimes you just can't pass up the deal. Another thing that my mom made, which I always loved. I don't think it's really a struggle meal though, because I don't think English muffins are cheap. But she would always get the Thomas English muffins. We'd always have them for like breakfast or something like that. I never really ate them, but for some reason they were always in the freezer. And every once in a while, my mom would whip out and make pizza muffins, and she would just like cut the English muffins in half, and then she would put like pizza sauce on them with like either shredded cheese, or she would just have like American cheese over it, and it would just be pizza muffins. She would put them in the oven and make like little miniature pizzas and they were fucking great. Like,
you remember Elio's? Do you remember Elio's? Yeah, frozen pizza, man. It was like this weird, I don't know how to describe it. That was Elio's. Oh,
Elio's. That I'm like looking for things to buy for like my nieces and nephews that are coming to town. And my sister is very clean with their diet. And so I'm like thinking of like random things. So I like texted my nephews. I was like, what candy do you want? Like, you know, all that. And I'm just like, so you're getting me think like Elio's, and I'm thinking about getting some like some stuff to make pizza muffins on some English muffins. I got to think of some other stuff that I need to get them.
Back in the day, you could do a solid lunch in New York for $2. Okay, I'll tell you what you can get. You can get a giant can of Arizona iced tea, whatever flavor you like. I usually got the fruit punch. You could get.
Never did the fruit punch. I'll have to try it.
Yeah, you could get a bag of potato chips. They're only $0.25 back then. You could get a zebra cake, which was another $0.25, and you can get what is it called? Like the iced honey bun for 50 cents. And that was like legit. Like, that was really bad for you because it was just like sugar. But man, if you were a kid, Bro, those were awesome.
Living the
you
dream.
know?
I
And
haven't
then you
had.
had the-
I haven't
yeah.
had all 4 of those things.
No, you've never had it?
Nah, none of that.
Zebra
Never had the
cakes are
fruit
like-
punch. Never had zebra cake. Iced honey bun. Never had it.
You've never had an iced honey bun? Oh
I
my
don't think so.
god.
I don't think so.
Dude, check this out. So this is what they look like. I'm so shocked. I mean, but then again, you were in Pennsylvania. So they look like this.
Yeah, never.
That
looks
they came
phenomenal,
in these
though.
packets. Oh, dude, they're so good. I mean, they're probably they came in things like this, and back in the day, you could get these for like $0.25. And iced honey bun. You've never had an iced honey bun?
Nah. We had tasty
Like
cake.
this?
I don't know if tasty cake. Nah, never had it. I've seen them, just never gotten them.
Yeah, like iced honey bun like this.
No, never.
Yeah, man.
We
This
had
was
tasty
ridiculous.
cake and growing up in the Philly area, in the Philly suburbs. So I would do like the peanut butter. I don't know what the fuck they were, but they were like little peanut butter things from Tasty Cake. They're really good.
Oh, see? What's his name? It's here. Iced honey buns were the best. Yup. Yup. My dad
Dude,
sold
you
them for
guys
50
making me
cents.
think. Maybe I pick them up for the nieces and nephews.
I'm telling you, man, you got to try an iced honey bun. I'm surprised no one's had I'm actually shocked that you never had an iced honey bun. In the chat,
Yeah, no.
how good is a coffee with an iced honey bun? Coffee and iced bun. Bro, these small cakes were my life.
maybe we were rich. I don't know, but we would do the Edmonds. Like Edmonds was like a big thing. People would at our family would always have the Edmonds coffee cake. So if anybody ever stopped by, you'd have the Edmonds coffee cake.
Then
Maybe
you
that
had
was a Philly
these.
thing.
Do you remember Oots potato chips?
Yeah.
This was one of those things. Like you could get like these. Yo, what kind of potato chips are $27, bro? The hell? $27 for potato chips?
Grandma's ripping everybody off.
Yo,
Maybe you have to order a bunch.
nah, it's still it's family size, but still 6 count. Okay, that's why I was like about to lose my mind. I was like, what is this? But
What's BP talking about? Pies? I've had cosmic brownies. One of the girls I dated in college was obsessed with cosmic brownies.
I've never had cosmic pies. What's it called? Cosmic this?
Brownie? Cosmic brownie.
Okay, let's see.
I think it's made by the same people that make it's made by Little Debbie. So same people that make the honey bun.
Yeah, I remember these oatmeal cream pies, honey buns, zebra
Ring
cakes.
dings.
Yep.
What are ring dings?
Where? Ring dings?
I bet Amit's got stories because he.
Oh yeah, I remember these ding dongs.
I think I've had those.
Yeah. I think I've had them a couple of times. I remember these right here. This is the Drake's ring dings. Oh my god, this stuff is so bad for you. Now that I think about it, no wonder.
I've had Hostess fruit pies for sure. Swiss rolls.
Swiss rolls.
Those things that never expire.
My dad sold all of those. Yeah. That's how Chris saves all his money. Yeah, exactly.
Are Swiss rolls good?
Say that again?
Are Swiss rolls good?
Yeah, they're pretty good. I'm not the biggest fan. I'm more of a honey bun guy, but sure.
More of a honey
Anyone
bun?
else? And anyone else have any nostalgic food y'all remember when you were a kid that you don't really eat anymore?
Butterscotch crimpets. Type that shit in.
Butterscotch. I've never had these. Oh my god.
Yeah, that's probably a Philly special.
thing? I remember this candy. It was called butterscotch. You remember like all the old people had these. They would just give them out. But they were
Taste
freaking
awful.
awesome.
I'll regain all the weight that I've lost so far.
This one
Eating
right
all
here.
this.
What is that thing called? Like there used to be a commercial with this old guy who used to give these out, and so all the old people started giving them out too. They're really tasty though. They're really good.
They are really good. My grandmother would always have these.
Yeah.
Amit said we're gonna have to have me try them all, and I'm gonna just gain all the weight that I've lost back.
Yeah. I mean, you just have a bite of each of those, you know, just like a
Yeah.
nostalgia thing. Yeah.
I'll relapse.
Dollar slice pizza. Tennis and ketchup chips. Let me see. Tennis and ketchup.
Yeah, we need a taste test. I don't know what it is. Like, I feel like I don't get as attached to sweets anymore. Maybe it's because like I still do like my diet sodas and stuff, but
I've never had Takis. I want to try them. Have you had
Takis
Takis?
are really good. I like Takis a lot.
I have to try it. I've never had Takis. I see them every time I go, but I'm like, I can't resist the urge to just get the hot fries. So I get these all the time. Anytime I'm driving long distance, like my brother's place, I always get these. The Chester's hot fries. Flaming hot.
The Flamin' Hots are good, man.
Yeah. God, so much nostalgia all in one shot. Shit, I'm gonna call my brother. I'm gonna call my brother after this. Be like, yo, what's up, bro? You remember back in the day we used to? He's like, yeah, don't remind me.
Calls on little Debbie. Well, good luck
Calls-
packing, brother. You have the next 2 days off, or are you doing some work tomorrow when you land?
No, I think I have some work to do tomorrow night, but it's not a lot, and I'm off tonight because I have to catch my flight. So
You're the man. Have a
Yes,
safe
sir.
trip, and I'll be FOMOing for sure.
Ooh, Roy responded to me. What's up, Roy? What's up? Let me know.
Hot Roy, writing the dissertation. What's your for Microsoft?
In that case, I'm not sure why'd you pick Nvidia. For Microsoft, you're looking at pretty consistent 15-16% growth. That's actually very nice. Thank you, Roy. It is very nice. I agree that the company's growing 16% predictable basis should have a higher multiple than a company growing at 16, but it's cyclical, sometimes going higher and sometimes lower. But Nvidia is growing like this 65 this year, 71 in 27. Is that the case? No, I think this is probably like 40, unless he's like thinking fiscal year. Whatever. And then 28 is 29, and then 29 is 60. Their cycle down, which is far too unreal, is only. So this is already passed. So next January, so this year they're going to grow about 60. So right here, 71%. But the year after that, they're going to be shooting down to 29. Well, Roy, I think you just proved your case. I mean, you just proved my case. If they're going to go from 70% growth to 30% growth, that's a sharp drop off in growth rate. Like a lot. And the thing is, the market is forward looking, right? So at the end of this year, what do you think the end of year price target would be on Nvidia based on what you know?
235, 240.
That's exactly where I land. That's 100% like you. I'm a little bit more bullish. I'm about 250, 260, but that's exactly right. I don't think it goes like 300, 400, like some people are saying. And then next year, what do you think after that? Like next year, where it goes?
I don't know enough, to be honest.
I think the year after, which is 2028, end of 2028, it'll probably be closer to 250 to maybe 275. Only because that growth slowdown would compress that multiple.
Right here first.
Yeah.
Man, Hot Roy even has personalized lower left graphics.
He needs a logo, bro. I have a custom logo on mine. Check it out. Yeah. So
do I need to get back on my Replit and add custom logos for when people share my shit?
I mean, if you want to, that's how you do it, right? So if you like, I download this, you can have the powered by Physical AI, but then you can also have your right here, your social media watermark.
What?
Where is it? Damn it.
Oh, you have to enter your username.
No, I have to go to the financials and do it from there. So like, let's say I'm looking at revenue, right? And I want to share this. I can download and it'll come here with my logo. See? And you can make the data labels whatever you want, you know, social media watermarks, Instagram, if you want to put like your username. So like, let's say for Chris, I would put, and then it would end up coming here. See that?
Giving me ideas.
Yes, sir. The one idea that I pitched to these guys today was that if they could somehow automate the feature to allow for us to do this, it would be really, really helpful.
Show it to me. I'll give it a try.
It's my doggo. I miss my
Yeah,
dog, man.
Steve asked me to like recreate a table for him that always shows like the 2-year look ahead, and I don't think he's yet to use it. So if you do it, dude, it'll be insane because he always does like the comparison against Apple to Microsoft, etc. Dude, 41K subs or followers. Congrats, man. You're doing awesome.
Appreciate it.
Well worth it. You're oh, that. Yeah, I saw you asking that.
Yes. So what I wanted them to do is, because they already have all the data, like they have all the KPIs that are like showing what kind of stuff that they're getting and which division is doing their stuff, right? So if they're able to kind of like let us get a copy of something like this, and what's his name? Sachin said it's called a Sankey diagram. So that basically you can go to a company, put in this thing, just click on it, and you get like an automatic Sankey diagram where you see like the net profit, the tax, the R&D, and everything like visualized in like one shot. You know, I mean,
I think the benefit is really the products. So like the things being split up. They like if you just do everything from the one side to the end, like revenue downward, it's not as fun. But being able to make the Sankey with like products is pretty impressive because.
Well, the thing is, you can kind of do it right now with Claude. You just ask it to do it. Like, let me just share my screen 1 second. And,
yeah, I'll just wait for you to log in and stuff.
Yeah, appreciate it.
Let me know when.
Okay.
Good.
Continue. Oh, wait, no. Hold on. Sorry. I have a corporate account and I have like my personal account for Claude. So I have to make sure I use my personal. Okay, you can share it now. Let me see.
Good.
Yeah. Draw a Sankey diagram for Google's last earnings. You'd have to audit it to make sure that everything is correct, but basically it'll search, it'll get all the stuff, like it'll go through the 8K, see like Alphabet report from 2024. Why are you looking at 2024, fool?
Took the last two literally. And I assumed it meant last year.
Yeah, let's see if it actually corrects itself or if it gives me 2024. If it gives me 2024, I'll be pissed. I'll be
You
like,
said Claude does it pretty well?
Yeah, Claude does it. Gemini does it too with Nano Banana.
Does it? Let me see what Replit does.
Architecting a 3-tier Sankey diagram with revenue segments and outcomes. Architecting on Google for Google's financials. Look at this. It got all the stuff. It broke it down. Once again, it says 2024. Why would you do that, sir? Why? I said the last. They have this key right here. Allowed me to, since unpackage is on the allow list. Segments, costs, breakdowns, Google Cloud. Let's see. For the diagram to balance on the right side at 97 tag. Simplest approach, skip the segment level breakdown. Now I'm checking the math. Okay, done. It's taking its time. This is the one thing that sucks. Well, I won't call it sucks about it, but it's like it's doing everything for you right now. I wonder if you could write code that allows you to basically take, like, query any financial data and turn it into a Sankey diagram automatically. And just have that, like, call it sankeydiagram.com, and you just put in the ticker symbol and it just comes up with it automatically for you. And it just caches so that anyone in the future, if they ever go to it, it's already cached, you know. Like, you don't only need to cache it once. So every time, like, Google reports on earnings, just do a Sankey diagram, put it there, it's cached already, and it saves it there.
Yeah, it reads if there's been an update to the SEC website of the latest 10Q or 10K has been.
Mm-hmm.
That's all you need to do. I'm curious, and we'll see what Replit creates. I'll share it.
Yeah. Oh, so you're making it, you're having it Replit do it too?
Yeah, I'm seeing, and if it works, then I'll just add it to my website.
Oh, cool. That'd be awesome. Let me see if this thing.
It said it
Yes.
like I typed in basically the same. But I wanted to be. I didn't say Google. I just said any ticker. So we'll see.
Where is it right now? Tier 2 nodes waiting for next stone.
We'll see who finishes first.
Yeah.
Thing that's nice about mine is that it gets already on a I can immediately publish it to a website. Replit's fucking awesome because if you're doing this through Claude, you have to find other people to host the website and the database and everything like that. Replit, you do it all in one. I should have put more money into it. I was shook.
That's funny. It says counting Sundar's billions.
Does it? That's pretty fun.
Yeah. There you go. Google Cloud, counting Sundar's billions. You see? Plotting the money rivers, flowing cash to the right column.
We'll go back and forth. We'll see who's winning.
Mine's almost done. Ah, there we go. It's done. It's not
go.
as nice looking, but here it is. Search. Even though you got the wrong year, bruh. I wanted 2025. Right, so but here it is, 96 billion.
You're giving me ideas though. I mean, once it's cached, I mean, you'll be able to store it. Maybe do the last like 8 quarters or something like that.
Yeah, so operating income, traffic acquisition costs are about 14 billion. Subscription revenue is here.
It doesn't have everything though. Like it doesn't go beyond.
No, and this is why I think people give like SaaS is dead. SaaS is dead. Claude is going to one-shot everything. I think that's why it's BS, because I think it could get you like 85, 90% of the way to what you're looking for. It's that last 10% that like you need to know what you're doing to get it to that perfect state that you want it to be in. Like, I don't see the value of this versus what the other one was that App Economy put out. Like App Economy puts out a better version. Like, look at this app.
Yeah, when you pull it up, just let me know.
Yeah.
There you go.
See, like App Economy does a much better visual of it. Where is it? Let me see if I can find one. Like this. This is better, you know? I'm sure that they have like some templates that they originally had for each specific company and just basically changed the what are they called, like the figures, and then it automatically populates.
Yeah.
I know. So what do you have so far? What does it look like? Is it still working?
Yeah. It's building like an actual site for it, so it's like building the long term, because it's building like a search feature for ticker symbols and everything like that. So we'll see. Sometimes I've never really had a point where it's been complete bullshit, whatever it's brought up.
Mm-hmm.
So we'll see.
So you've been using Replit to build that website?
Yeah.
Oh, interesting. Okay. Let's see. Someone said there's video indicating that there are boots on the ground happening soon. I don't know, guys. I've been seeing a lot of misinformation. So
Oh yeah, I've seen a lot of people like just trying to, like the people that like say a bunch of crazy shit and then they hit the show more so that you have to like click in the comment section to show that you interacted, so that way they get like the, it's like you're really trying to fearmonger for clout. Like, really?
what did you think about that idea that Nikita put out for Twitter, which was you can basically only get monetization from the region that you are in. Like for me and you, we're in the US, so we actually get monetized. What the hell? That's cryptic.
What?
The White House, share my screen real quick. The
Am I
White
on it
House
again?
the White House put this out. It's dark. What is that? What are they? America? What is this?
Turn on the sound.
What the fuck is happening? I did. Hold on.
I don't know.
It's
If you're
just
sharing
a
sound.
it's just a click. It's like the thing. What is it called? Like the iPhone, how it clicks. Like the sound, like that you just got a message. That's it. Like phone sound.
It's
I
not
thought I was
playing
getting
on our end, so
here. I'll share this. I'll share the thing 1 second so you guys can hear it. But it's share audio tab. Okay, share audio tab. Yes. Screen to share. Okay. Go ahead. So right here. You heard that? The ding? The
yeah.
yeah. But every time it dings, it's like a flag. Yo, what kind of cryptic shit is this, bro? Why are the stripes in the wrong way? I don't know.
I don't know. Let's see if this
What
shit
is this?
works. What company you want to do?
This is an 82nd Airborne raising flag on Karg Island in the Hormuz Strait. What?
What ticker symbol we want to do, Mr. Patel?
I'm trying to fit. All right, let's do the same thing. Let's do Google. I guess that means message received with that tweet.
Oh, it's not finished yet. I thought it was.
Okay. What is going on, man? Why is the White House posting that? Like, are we going to war?
I think maybe that meant, the way I'm interpreting it, this is just
Mhm.
pure speculation, is that maybe they are in communication. I don't know.
82nd Airborne. I don't know. What is this? What the hell is happening, man? Looks like PSYOP. Man, aren't you the White House quant? Shouldn't you know these things? Are we going to war? Is that what's happening?
I don't know, man.
Are these guys on an island or did they land? Are they in the Strait of Hormuz? Let's see. Indian people fighting over gas. Let's see. Is this Polymarket? Strait of Hormuz traffic returns by normal. So does somebody know what this cryptic message was, guys? Wait, what is this? The sound on the White House posted this, then deleted this video.
It's launching soon, right?
Yes.
So cool. It's launching soon, right?
Yes.
So cool.
What? Maybe it was just a mistake. Maybe they just messed up and they made a mistake.
I don't know, Mr. Patel.
All right, I gotta go, man. I don't want to wake up tomorrow. 5,000 troops are on the way. That 1,000 are on the... All right, I'm gonna go, man. The blue
You're the man.
room with the yellow oval diplomatic reception room below it. Interesting. I don't know, man. All right, fuck it. I'm going. I gotta get to bed. I'll talk to you later.
You're the man, dude. I'm gonna wait till this
care.
finishes. Later.
All right, have a good one. Bye.
Cheers. All right. Let's just share, see where this is going. Yeah, it was weird and interesting to kind of see. Hopefully this is done here pretty soon. This is not Claude. This is Replit. But I've paid a lot of money to build Probably. Not a lot, but dude, obviously if I paid somebody else to do it, it would have cost a lot more, but it definitely costs money. Over $1,000 probably. To build Probably. I don't think it would take this long, but I guess it's trying to build it for every stock, so it's building in the back end. It's not just for Google, so I guess maybe that's why it's taking so long. But hopefully this works, because I'll just copy and paste the data into Probably and ask it to use the same formatting, etc. And it'll be something that's pretty cool. Ah, so looks like it's running into some issues here. Correct data for Apple revenue using. Okay, so it's looking like it's finding it. It looks like it's validating and fixing everything. It is far from the free tier. It chooses which one. You can kind of. I think it'll like initially for most stuff. I think it tries to go with ChatGPT, and so sometimes it depends on what I'll have it do. But I'll ask it to, like, for example, I might build this initially, and then I'll go back and I might build it like just to build it, and then I'll go back and ask. It's like, well, is there any sort of fetching or scraping or anything that you could do with cheaper models? Because if you're just scraping data, you don't need, Chat GPT 5. You just can use like a mini or something like that, which could be a fraction of the cost. And so And if you cache things as well, so if you, instead of it just being like every time you put in Google, it'll cache it. So like obviously if you do it once, it's a quarterly thing, so it's not going to change anymore. So you could have it saved. So then you have a database associated with it. So we'll see what ends up happening. Probably does do that. Actually, while this is loading, maybe I just show some of the things about Probably. So we have something called Sandbox in here. So you could type in a ticker symbol, let's just say Venture Global, and you have, I don't know, $150,000 on it, and you are targeting specific things. You could say you want income, you want growth, you want aggressive, are you bullish, are you neutral? Let's just say you want to be conservative and wheel, and then you can say, okay, Venture Global, you have 150 grand to kind of give an idea. And it's still, I think I'm sharing, right? Nope, no, I'm not sharing. Yeah, you can type in Venture Global, you have 150 grand, you want to target a 4% return because you just want to hold the shares and wheel it. And it kind of gives you an idea as to like what you can do. So you can sell 10 cash secured puts at 15, getting $1.50 each. And then it kind of explains to you what you're doing and getting associated with each individual one. Or you could just say you want it to be super aggressive. Like what does that mean? It'd go and it'll, maybe you don't want a 4% target. Maybe you want something that's kind of crazier. Let's say something like 15%. Failed. Don't fail on me now. If it fails, it's good. We'll find issues with it. Fix it. It legit failed. Go back. Do VG. Let's try this again. Let's do 10% or something instead. We're bullish. You can do a spread. Leaps. Interesting. So yeah, you have the sandbox in here for your portfolio. You can kind of just track some things, how you want it to grow. If you're going to add monthly, if you're going to add monthly or something like that, you can do what if mode. I'm not logged in, but you can add basically hypothetical positions. So if you start adding, let's say $1,000 a month and whatever over the course of however long, what are you going to end up at? And what's your portfolio looking like? And let's say you have a portfolio that you want to keep adding evenly amongst these things, $500 a month or $1,000 or whatever. You could look out in time and see, hey, am I going to hit $1 million? Like I think I will. That sort of thing. That's kind of the goal. You can look at like annual income or options income. It's not perfect yet, but I think the thing that I'm most happy about is this dividend focus piece, because it's something I do. And so I've wanted to actually think about, and I had it in here somewhere. I don't know why the UI isn't working. Maybe it just got built in the tasks in the background, but never actually deployed. Like being able to monitor your actuals. So like you obviously got paid in 24, 25, etc. So being able to track basically what your forecast is versus what you actually got. And then, then you'll be able to say, well, you're up, 20% in monthly income comparatively to what you had in 2024 or 2025. Because I do that a lot. Like that's what I do in a lot of my stuff. Did this finish yet? This still isn't finished. It looks like we're getting closer. It says marking complete. So I think we're getting close. It's going to validate it, I think. Let's see if we put in Google. And we'll do ending December. Make sure I'm sharing here. Yep. It's not finished yet, so maybe it's going to take a second. Yeah, it's not finished as of yet, so it might not work right now. It's getting close. Validating through everything, so. Yeah, if any of you guys are curious about using Replit, let me just stop sharing for a second. If you're very curious about it, but oh no, that's not what I want. I want to share like the application. There you go. If any of you guys are curious, want to sign up for it, it would help me out, make things slightly cheaper. And now my computer is dying. We're getting closer, closer and closer and closer. I think it's thinking through, thinking through. What happened to Dave? I don't know. I reached out to Dave on like his social medias and stuff, and I think he just wanted to get out of social media. Understandably, like it's not, you know, it's not the most. How do you say it? It's very time consuming. You don't get paid for it very well. I've actually lost money if you think about it because I'm coming out of pocket to do a lot of these things. Like I went to the Palantir Investor Day, I went to Rocket Lab, like all that stuff I had to come out of pocket for. But it's you do it for the love of it. Yeah, you do all that stuff for the love of it. So with Replit, you get a certain amount of tokens. I blew through those very quickly. Haven't taken a vacation lately, but I guess if you consider the meetups a vacation, I do some work when I'm there. But yeah, the meetups are a good time. You get to meet up with people you understand why you kind of do things, and you know how much you're influencing and helping people, influencing for the better. Like I'm not trying to sit here and convince people to buy certain things, but as much as they will, regardless of whether or not I say to not or do something, they'll still do it or not do it. Hopefully here soon. And I was hoping this would be done like 10 minutes ago, but really trying to build this thing in. Let's see if it does anything now. It seems like it's getting closer and closer. Not yet. Huh. I thought it was finishing the task, so I'm kind of confused why. Let's see. What about TKQQ? I saw puts on TKQQ. What's something you're terrible at that you wish you were great at? I can be very logical. And so when people tell me about their problems, I will immediately try to jump to solutions because that's just the way my mind works. And so I've been really trying to train myself when people start to like tell me about an issue or anything like that. I will be like, okay, I appreciate you bringing this to my attention. Are you here because you just want to vent or because you actually want solutions to your problems? Because I have friends and sometimes I've had friends come to me for solutions, right? And so my initial like, and that's just the way my brain works. And then I have times where I just know that people want to vent. And so I tried to like understand, like, is it a venting thing or is it a, so yeah, guys, this isn't doing what Chris is doing. Like Chris's was like a one-time thing. Like this, what this is doing is legitimately building a website so that anybody, like, if I wanted to publish this immediately after it's done, if it works, I could do that, and it would work on any ticker symbol. So my thought process is like, if I'm going to do this, I'm going to try it, and if it works, then I'm going to put it into Probably.ai. So fingers crossed. If I made the Terminator, then we'll find out. This would be kind of cool though to get working. Yeah, if you guys do check out the website, um and you see anything in there that you want, there's a lot in there. So like don't just spend a minute on it and just be like, man, let me just ask Matt. It's like there's a lot of tabs in there. You can do Congress stuff, you can see what's going on in socials. Like you literally, like, I have built a really cool standalone product. And so I mean, I encourage you all to look at all the tabs, like your live stream dashboards, your what else is there? I mean, there's so much. Your forecasts, like, and there's little sidebars and quick guides on like what it actually can allow you to do with each individual one. The feeds page, I'm not logged in, but you can like talk to people. I have articles that I've written for you guys that are interested in that. You can, under your watch list, you can kind of follow particular companies that are on your watch list. You can see social pulses, what companies are being talked about on which particular sites. I mean, it's a pretty cool site, man. I really like it. All right, we're running validation again on this. You can see what Congress bought. In fact, I think it was Amit that said somebody just bought more stuff. So I'd have to see if this is it should be active. And you have the 13F stuff. You can search who bought what, when, where, why. All the different things. Who's buying the same stuff? Who's selling the same stuff? You can see the heat map where people are allocating all their capital. Look specifically at earnings calendar. What's coming up? You can play music. You can do a lot. Okay, I think we're getting close. Maybe not. I don't know. Is a myth related to Gandhi? I did create this and nobody fucking watched it. So I stopped playing it. I literally created a live stream that literally showed when everybody's live, and it would even play the live stream clips of people literally being live, and nobody watched it. So I turned it off. Let me pull it up. Where is it? This is an old rendition. I restarted it. Let me go. Is this the latest one? Yeah, let me see. I don't know when this is, but let me see if I can see if anyone's on here. But you literally had to schedule everything of when people were supposed to go live and everything. Because everyone has their dates, and so I just like had it all set up on a schedule. So there you go. You can submit. Yeah, the thought process is eventually to roll this over all to Probably. Hence the live dashboard on Probably, which I'll bring up. And you can toggle on whatever you want, your watch list, your ticker details, your headlines. Options I don't really care about. Market movers, yes. Sector heat map, yes. This is zoomed in. Sorry. And let me drag this up a little bit. So yeah, you can customize it, turn widgets on, widgets off, whatever the heck you want. And my thought process is to have this running, and then maybe in the lower right corner have the live streams. Man, this thing is still going over here. I thought it was getting close. Says it's going to mark complete. I don't know if it's a particular part of the task or it's getting closer. What does it mean by analyze? Yeah. All 4 package type check cleanly. Let me update the message. See what the people are saying. This is the problem, is that there's so many egos. And I'm not saying like, but it's just, you have to realize somebody's going to have to be the leader, and somebody's always going to think I can grow faster than him or not. And so it's kind of tough unless you have a ringleader that's willing to shell out and say, I have $1 billion and I'm willing to pay you X, Y, and Z to make it work. It's tough. So it's tough to just be like, yeah, one of it, you know what I mean? And then somebody's going to have to control the bank account, and are they going to pay? And, so it's tough. The organizational piece. Some people want to have ads on their live streams so they can grow faster. Some people don't want any ads on their live stream. Sorry. Some people want ads on their live streams so they can get paid for the advertisements through their streams. Some people don't want that. So unless you have somebody that wholly owns it, it's very difficult. And one of the things that I've hoped to do with Street Exchange, actually, the site that I showed you, and probably the website, is one, pay contributors. So if I actually get money from the site and eventually start to get AdSense and money through that, to pay people. And then same thing with the Street Exchange. My hope is if people would go to that, one, I hope to try to make it interactive with the chat so that it like can automatically work with chat, etc. TBD on that. But then also, if people are going to that as their central location to see when people are live, that's going to generate ad revenue. And whatever ad revenue, my hope is eventually I'm able to pay individual contributors as well to do live streams. So somebody might be like, I want to get into live streaming. Then I can be like, sure, like I'll come out of pocket and I'll pay you $30 a live stream for an hour. And some people might love that. They'll be like, oh, like I'm able to grow my influence, etc. They can use it as a kicking off point. And if they make more than that, I'm more than happy to share it. I'd rather like just get content and like grow the channel. So I'm truly trying to think of it like a long-term business, but it's taking some time. And right now I can't even get AdSense up on Probably yet. It's causing issues so far. And I think it's because I don't have original content. It's like they only want to sponsor videos, or not sponsor videos. They only want to put ads on things that they can read. And so if you're talking about charts and things like that, the bots that do the advertising can't read that because it's mostly based off google.com and it's not like YouTube videos. And so it reads for original content. And now if you're trying to create a bunch of boxes that create dividend charts and stuff like that out in the future, it can't really read that. And so you need individual articles in like a For You page, which is kind of what I've tried to create to an extent. Let me log in really quick. Let me see, go to the feed, share, like yeah, so I'm trying to get like original content just like people would on X and stuff like that. And let's just say you're interested in Amazon, you can have like, oh, I'm long on Amazon, etc. If you have articles, you can read through articles, you can search for particular companies that you like. You can see who's contributing the most over the past, say, month or whatever. So you can find people that are similar to you based off of what they are searching for, what their favorite stocks are, contributing, all that. So, I mean, how many people have visited the site over the last 24 hours and 7 days, etc. So I'm really trying to get it so that it ends up being kind of its own standalone sort of thing. The hope is to make it free. The hope is that I can get some advertisements on it and make it completely free. There's probably going to be some premium versions, like if you don't want ads, then I might make it like I might try to figure out approximately how much I'm making. And if people want ad free, they can do ad free. But I don't want to overload it with ads. Like I just want it to be something that people can use. And my thought process is I'll take whatever money I get from that and use it to advertise on X, use it to advertise on Facebook, etc. And really, I think the thing that's going to help people a lot is that dividend builder. So, what's in it for you? You don't have to fucking use it if you don't want to. You don't even have to be here if you don't want to. When's this gonna work? Yeah, Steve has his thoughts around doing the ads, and I think there's also to an extent some thoughts around will Google or YouTube algorithm push your streams more if you actually do advertising. So it's a piece of like balance. Do you want to be caught in the algorithm and get to more people, or do you want it to be ad free? And if you're ad free, then you'll retain more people and they'll be able to do more. Is it getting any closer? Yeah, I'm pretty upset that I didn't put more into Replit, the private funding round. I should have put more money in. It's actually a pretty cool tool. June saw an ad and she clicked off. If you're using it on your phone, the phone, I need to spend some time on it's the application and the website is really currently designed for desktop usage. Because it's mostly for people to be on desktop, but I'm trying to make it more mobile friendly. So if you just give me some time, I'm trying to make it now where I'm not actually burning my own tokens. I'm using the tokens that are allotted to me, which apparently I'm probably going to use up with this entire new website build that I'm trying to do right now. Which I didn't think was going to be this difficult, but We're almost done, I think. I thought that was going to be done like 10, 15 minutes ago, so I apologize for taking so long. Run the full end-to-end uncashed exercise. Okay, I think we're getting close, guys. It said it did Apple. It's doing Tesla. Huh. It's still running, man. At this point, I hope it's not just like it might cut it off here in a minute or two if it doesn't like. I think it's running into headaches. It's like, dude, just take it from the SEC website. I don't know what the issue is here, but like it pulls like data back for like the last 5 years, but it just hasn't created the Sankey things yet. I haven't seen a charge on my credit card in a couple days, so I haven't run through my credits yet this month. Generally, I'll like be running through $50 every day or every couple days. So it's reading, but it's not generating the actual breakdown yet. It says it down here at the bottom. Total revenue, gross margins, etc. But it's not creating the flow.
Huh.
I think so. It looks like it worked for Apple. But it looks like just for Tesla, it's having an issue, and I'm not 100% sure. Huh. The Asparagus Festival at this time of each year north of you. Aspargarita. Yeah, I used all my credits for the month already. I think it just refreshed like 4 days ago. I used to try to try to do the like member things, and I just felt like I wasn't doing a good job keeping up, and it was rather inconsistent. And so now it's just like I try to just do everything I can free. And if you want to do a donation, feel free. And I think there's like a WhatsApp group that I have, but um, yeah, I mean, for Patreon, it's the same access to like as the same YouTube member sort of thing. And like I tried doing writing every couple days, and it just got too tough. Like between trying to do YouTube, my normal job, um, like I couldn't dedicate enough time. Like maybe in the long term, but like even if that's the case, and I'm doing YouTube full time then, or writing full time then, it's like why would I also need to do memberships? Like it just doesn't make sense. So to me, I think the big thing, like I'm just trying to go, I don't want to say all in on this website, but it probably works. I mean, my hope is that I can make that a legit business and hire people too. Like that's the thing that I want to do most is hire other people, because being able to grow other people's careers, like Austin and Doug, and they're really smart dudes that I would love to see get a get a bigger spot of the limelight. And so being able to subsidize them, like even though if it took them, let's just say, for example, they're probably not even making money on YouTube yet. And so like to be able to just be like, hey, I'll pay you $50 to write this article, you know, if I can afford that, then I'll gladly do it, even if it's quote unquote overpaying compared to. But if it means that I'm inspiring people and building something and having fun with it, that's more important to me um, than like maximizing revenue and stuff like that. Like I think that there's something to be said about reinvesting back into people, reinvesting into the site. That I think is beautiful, and hopefully there's something about it that people get drawn to. Right now, it's something. I'm gonna put eye drops in, so I'm just gonna close the camera for a second. Uh, but I think there's something about it that either people don't like or they just haven't grown accustomed to yet, which is fine. And I'm just trying to find that spot where people see the value and want to use it. And if they don't, then I've lost some money, and that's okay. And I tried, but um, yeah, that's kind of the hope, is that it works out and I'm able to get some revenue from it. Use some of that money to reinvest. Use some of that money to pay people. And it's a website people love, and it'll give me something to occupy my time. All right, I think we're getting close. I said that 10, 15 minutes ago, and then I said it 10, 15 minutes before that. So all right, restarting the server, deleting the cache. I don't know why I got so hung up on Tesla. I guess Doug and Austin, they're on almost episode 20, so they've been doing Money Mobsters now almost for a couple quarters. Just over a quarter, maybe. I don't know if it's restarting. Yeah, it's running a full test right now. So it's pulling the revenue. Still no financial flow breakdown. I pulled Tesla. So let's see. So it's clicking Tesla. I think it's going to see that the Sankey doesn't show up. It sees the Sankey, but we do not see the Sankey. We cooked. It says that it sees the Sankey. I do not see the Sankey. It says the summary. View Sankey diary room renders, which I don't see. All right, let me screenshot it. Sometimes it's just a matter of like a small little thing. It'll like show it in the background and it thinks it sees it, but it doesn't. But it is creating it. It's just not showing the actual rendition. So I'm curious if it's something super simple. So fingers crossed that. I don't dislike the NeoCloud names. I just haven't put a lot of money into it. But I know Tanner likes them a good bit, so shout out to my guy Tanner. The validation failed. Okay, so I think it spotted that it's not building the Sankey. In retrospect, I probably shouldn't have started with like a 4 to 5 sentence prompt. What I probably should have done was create a Sankey diagram, like Chris stated, with the fourth quarter results of Google for full year 25. Asked it what website it would want to pull that from, whether or not I agreed from that, what that website particularly to use. And then kind of give an agreed layout with fake data and then go, rather than just like kind of giving it free reign. Okay, looks like we're getting closer. see. Curious if any of these forecasts have updated for Probably, actually. With like back up to 40 billion. So let's see if anything kind of yeah, it keeps us moving the one thing. Yeah, it's kind of doesn't actually validation failed again on what? Significant drops in LNG, yes. Expansion in new regions, yes. Now I'm actually kind of curious though what it says about next. Oops. It's 1.9 billion. I think $15 in 10 years. With an upside of 40. I think it's wrong. Just don't think it's bullish enough. Regulatory delays, competitive pressures, execution risk. I think if you get rid of some of that. All right, let's get a restart here. Yeah, still no Sankey diagram. I'm going to stop it and just post this. And say, it worked for an hour. Holy crap. Yeah, I figured it was doing the Sankey, but it looks like it's just the rendering preview. So like the very last part, I guess, before it actually shows it. So hopefully it's very simple. I still think it's going to be tough though for it to read automatically because every 10Q is going to be slightly different. Every 10K is going to be slightly different. Kind of like as Chris was showing, like some companies will have services, some will specifically have goods. There we go. Let's go to Google like Chris had earlier. Oh, we were just doing Google. Yeah. What is this other income net? It's like 100% goes directly to the net income bottom line. Is this cash? What? Let's try Tesla. Revenue, gross profit, operating income, and then net income, interest. Let's try Amazon. I think it's trying to work in the background, so I think I'm overloading it. That's Alphabet. Um, Excuse me. Is there a way to see what the products are that generate, i.e., e-commerce versus cloud, or Amazon, or Tesla Energy versus automotive? No, it's just confused because it's trying to validate the code. And so if it restarts, it might hit the return button and go to a different one. So looks like we're pretty good. I'll probably work on this a little bit. And then include this. I'm trying to think where's the best place I'd put it under probably. If people actually want to view it. All right. Well, now you guys know why sometimes I stay up till like 4 or 5 a.m. working on some of these things. It's fun. But I appreciate you guys. I wasn't expecting to go for like an hour or so beyond when Chris left, but it was fun answering some questions for y'all. Hopefully you guys learned a little bit, and hopefully you guys enjoy using Probably. And let me know if there's any suggestions. There's lots of stuff I want to do with it. I just have to be cautious at this point because I've spent, some good money on it, and I'm trying to slow down. And I'm only 4 days into my March allocation, and then April allocation I'd already overspent. So at this point, maybe for like a month or two, I might just join the next tier up to get some more credits, and then once it gets to like, well, I'm kind of at that point. Like now I'm just tinkering with it. Like now I think the biggest thing for me is I just need to write articles on the site and have it kind of grow in the search console on Google and establish its presence. And once it establishes its presence, it hopefully will be able to continue to grow. Cool. All right. Well, you guys rock. I appreciate y'all. Have a good evening, and thank you guys so much. I'm trying not to stay up till 5 a.m. tonight. So thank you all again, and enjoy the outro.
That's my quant.
Your what?
My quantitative.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
Be first, be smarter, or cheat.
I'm not fucking leaving.
Sell it all today.
Or look at his face.